Hi, this is Eric Schleien, and you are listening to the Intelligent Investing Podcast through HotMic. It's our first broadcast ever, and today we're going to be um, just listening into the Berkshire Hathaway meeting, which is today. This will be um, my first year in 15 years that I will not be in Omaha, Nebraska. So we're going to be covering the Berkshire Hathaway meeting in real time, and I'll be commentating on the Berkshire Hathaway meeting. I have an iPad to my left, or on your screen to my right, um, with the pregame show. So if you guys want to watch along or listen along, you can go to Yahoo Finance and listen to the live stream on Yahoo Finance. They're going to be starting on a little bit, about an hour from now. There's going to be some interviews and things like that going on. So right now we have Warren Buffett from a March interview with Andy Sewer on a show called Influencers. So yeah, I encourage you guys to look at the Yahoo Finance stream, and for those watching later on who aren't not watching live right now, there is going to be a Yahoo Finance stream as well, on the Yahoo site that that will I'm sure be replayed again and be available to check out. So yeah, it's an interesting day today. Berkshire Hathaway reported their quarterly earnings like they do every year. The one difference this year is that Berkshire is not going to be a live studio audience. There's usually 30 to 40,000 people coming into something like this, and now there's just going to be Buffett, and even Charlie Munger's not going to be here this year. It's going to be Greg Abel, who is considered someone possibly to take over when Buffett dies. So it's going to be an interesting event today. I assume there's going to be no company movie, but you never know. So let's take a look. I'm going to go on Twitter right now and take a look at the hashtags for BRK 2020 and also for Warren Buffett. So we'll be looking at those throughout the day, and I'll be reporting anything that I think is interesting or noteworthy that people are posting, because sometimes on social media there's just interesting things that people start posting. So let's see if there's anything right now that's kind of interesting before we get started with the actual meeting. I thought I would come on a little bit early, so if there's any news or interesting commentary before the actual meeting, it might create some good context. So, all right, so here's an article that's just come out from Bloomberg, and the title is, wait for it, The title for Bloomberg is, if this thing will load. All right. So it says Berkshire Hathaway. So Buffett stays on the sidelines with cash rising to $137 billion. The Berkshire cash pile climbs about $10 billion, and Buffett sees some severe impacts from pandemic on the Berkshire Hathaway, business subsidiaries. So it says, Warren Buffett has been waiting for years to look for stocks to look more attractive. He apparently didn't think the first quarter plunge was that opportunity. Okay, that's not the full story right there. I'll get into that in a second. As the coronavirus slowdown started to grip the United States, the famed investors Berkshire Hathaway was building its massive cash pile to a record $137 billion by the end of March. Okay, that's true so far. The company said the figure climbed even higher as it dumped more than $6 billion of stocks in April, making Buffett a net seller of equity so far for the year. Buffett, who will host Berkshire's annual meeting virtually later Saturday, has largely stayed in the shadows as the pandemic hammered the global economy and stock markets, and that's a contrast to the financial crisis in 2008, when his Omaha-based company dipped into its vast cash reserves to gain lucrative preferred shares and rescue businesses teetering on the edge of collapse. While Berkshire's operating earnings climbed in the first quarter, Buffett warned of pain from the virus's fallout. As efforts to contain the spread of COVID-19 pandemic accelerated in the second half, and this is from the actual filing, spread of the COVID-19 pandemic accelerated in the second half of March and continued through April. Most of our businesses were negatively affected, with the effects to date ranging from relatively minor to severe. So really nothing new there. The sharp drop in stocks sparked a debate over whether the slide was overblown, with some financial leaders highlighting buying opportunities and others predicting more pain to come. Those looking to Buffett for bullish signs would be left wanting. Berkshire reduced its stock buybacks even as its shares saw their biggest quarterly decline in more than a decade, while the $6.1 billion of net equity sales in April far outstripped the $1.8 billion of net purchases in this year's first 3 months. So I'm going to get into that a little bit more as well, because that might surprise some people. So historically, here's a quote, historically he's been pretty visible in the marketplace, encouraging investors to take advantage of market downturns and be greedy when others are fearful. Jim Shanahan, an analyst at Edward Jones, said in a phone interview, but if Buffett himself isn't seeing opportunities, even in his own stock, what are we to think about the recent market sell-off? It is not a buying opportunity for long-term investors? ? So, with all due respect to this guy, Jim Shanahan, who I don't know who that is, other than that he's an analyst at Edward Jones, that is a laughable analysis. So, to make the conclusion, or to even start asking, well, then he's not seeing opportunity, so maybe this is not a buying opportunity for long-term investors. Well, what he's not saying is that most long-term investors don't have the problem of having as much capital as Warren Buffett does. You know, Buffett's literally sitting on over $130 billion of cash. I'm going to assert that the average long-term investor is not sitting on $100 billion plus of cash. So, you know, if you guys look onto my podcast, now for those of you who don't know who I am and don't know what my podcast is, I run a podcast called the Intelligent Investing Podcast. I'm also going to be putting the audio of that later on onto the podcast for those who are not watching live. And, you know, we've done a coronavirus investment series. So one of the fallacies is to think that just because Buffett is doing something that directly translates to what the individual investor should be doing. That's a logical fallacy. That is false. That is not to say you shouldn't be looking at what, you know, the great investors are doing. I think it's actually wonderful to look at that. But you have to remember, if you're dealing with a portfolio of $10 million, $1 million, or $100,000 or $10,000, you have a significant edge to, to Buffett. You know, even in a Berkshire Hathaway meeting many years ago, Buffett said to me directly, he said, you know, if you have, and I'm paraphrasing, but he said that someone within a portfolio of under $1 million is going to have an edge to what Berkshire Hathaway can buy, because Berkshire Hathaway does not have the kinds of opportunities and the opportunity set available to them than the average smaller investor. So I'll give you an example. You know, if you go on to the Intelligent Investing Podcast, which you can find at ericschleien.com/podcast, or you could, put up your favorite podcast player and just search Intelligent Investing Podcast, you'll find it. You know, so here's an example, right? So I'm looking at, episode 83 of the Intelligent Investing Podcast, and we go in Coronavirus Investing Series Part 2. This is an episode I did with Jeremy Raper, and we talked about AirCap. So here was a situation, and it's still ongoing, where you have an airplane leasing company. It's trading at fractions on the dollar of book value. There's going to be some impairment of book value, most likely, but not to justify trading at pennies on the dollar, that it's basically being priced for bankruptcy. Normalized return on equity should be double digits, and I think they're going to actually come out of this even stronger because of their liquidity position. You would literally need revenues to, you would need business to drop to zero for about 24 months for this company to start being in bankruptcy trouble. They're the best airline leasing company in the world. So now if I was to go to their market cap, if I look that up real quick, I'm going to go to Yahoo Finance for that. Let's see their market cap. Now, full disclaimer, Yahoo Finance isn't always 100% accurate, but usually is. So it's a $3.499 billion market cap. And a few weeks ago when I did that podcast, it was actually maybe 20%, 30% less than that. Doesn't matter. Let's just call it $3.5 billion to make it easy. So if Berkshire Hathaway was to buy a 1% stake, 5% stake, even 10% stake, it really doesn't move the needle that much. They have $137 billion in cash. That's, well, they can't buy AirCap. I mean, they can, but they would have to literally buy AirCap 39 times over if they wanted to buy the entire company. They could literally buy 39 AirCaps to use up their cash position. And Buffett said he'd leave $20 billion aside for cash reserves. But my point is to take a 1%, 5% position in AirCap is a waste of his time. So he's confined to a company like Apple, or Amazon or some of the other holdings that they have, American Express and Wells Fargo and some of the other banks. So, to say that it's not a buying opportunity because Buffett didn't buy, well, let's look at Apple. Well, I don't think, if I'm looking at the valuation today of Apple, and we just go onto there, it's trading at 22 times earnings. The stock is, let's see how much it's actually down throughout this time. So it's a $1.2 trillion company. It's gone down from a high of around 296. Now it's at 289. I'm sorry. I was looking at a 1-day chart. It's gone from a high of 317 to 289. So it hasn't moved that much. And here's Buffett, who's already on record saying, we are still nervous, in terms of we don't really know what the future is going to look like through all this pandemic stuff. And, as Charlie Munger has said, we're just kind of steering a ship through a storm. We just kind of have to survive the storm. You got to remember, a lot of the Berkshire Hathaway shareholders are already very wealthy. And the way that Buffett has made it very crystal clear is he's going to manage the company extremely conservatively. He wants to have a fortress balance sheet at all times. And he doesn't want to put all his capital to work in a time of uncertainty where things could get worse and maybe there's some more insurance liabilities that come out. So you got to remember, the way that Buffett is going to manage Berkshire right now is different than the way Buffett would have managed Berkshire in the 1970s. And it's certainly different than the way that Buffett would manage his own money personally with a smaller portfolio. So when you're dealing with smaller businesses or even medium-sized businesses, you got to remember the small businesses got hit a lot harder during the pandemic than some of the larger companies. And especially if you look at some of the larger tech companies, they've held up pretty well, and probably for good reason during the pandemic. So, then there was another thing that Buffett has slowed down his buyback program. People go, oh, well, why would he do that? He bought more stock in the fourth quarter of 2019 than he bought in the first quarter of 2020. If you read the quarterly filing this morning, you'd see that. And, well, he might think that, maybe the intrinsic value of Berkshire has gone down somewhat with the stock price. So maybe he doesn't think it's as cheap as it was in 2019, where there wasn't pandemic risk, immediate pandemic risk. And again, he's confined to certain deals. So, one of the other things too that you could speculate about is, Charlie Munger said in his recent interview last week that the phone is not ringing. I think what you could make from that is a lot of these companies right now, they're going to the government to try to get assistance. Well, this is a different situation than in 08, 09, where Buffett was able to make quite a few deals with companies to give them some financial stability in exchange for preferred stock that could convert into equity. Now, Buffett may have that opportunity going forward. You remember, he prefers to buy whole companies than to buy stocks if he can through the Berkshire system. It just it creates more value. If Buffett can find a cheap company and buy 100% of the company, he would rather do that than buy stocks. Well, a lot of the large companies that would be in his target to buy have not gone down as much as some of these smaller companies. And then the other thing too is, he's going to be managing this very conservatively. So, we look at, say, another, for instance, episode 85 I did, Corona Investing Series Part 4, we did a thing on the shipping companies. Well, Buffett is not going to buy 100% of a shipping company. It's actually a pretty terrible industry most of the time. And these shipping companies, again, are often pretty small. But it's possible that some of these are going to make their entire market cap over the next few quarters. So, let's look at Scorpio Tankers, which is, a company that we had talked about on the show. Their market cap is $1.2 billion. Again, will not move the needle at Berkshire Hathaway. We talked about a company called GAN PLC. This was another episode I did. This was part 7 of the Coronavirus Investing Series, part 89. And looking at GAN, it's the same thing. They're a very, very small company. One of the thesis was that, the short-term thesis is that GAN would benefit from people staying at home who do online gambling. So they control the back end of some big online gambling companies like FanDuel. And we talked about the competitive moat and that they trade at a low multiple for a very high growth stock. Now, if you would bought GAN at the low in the 70s, it's now trading in the 200s in just a month. So you're looking at a rate of return that's triple digits. So there was opportunity during this time, but again, what is the market cap of GAN? Well, if we look that up, their market cap is $196 million. So again, for a portfolio where they have $137 billion of cash, just call it $100 billion to be safe, of investable cash, what are you going to buy? A 5 million position, in a little company that's barely, that's very hard to even buy in the first place. It's very thinly traded. So again, this is something Berkshire wouldn't even look at. It's not even in their circle to look at. It's just a waste of time for them. So here's another article from CNN. Let's take a look at this one real quick. Close out a bunch of these windows. And let's see. So, article from CNN, and it says, whoever wrote this article is an idiot. Load this up. So this is, God, I hate this stuff. Buffett's Berkshire Hathaway reports a nearly $50 billion loss. Ooh, that sounds scary. Well, I hope they explain the context for this loss. You would think a responsible journalist in business would, but let's check it out. Berkshire Hathaway, the massive conglomerate run by billionaire Warren Buffett, posted a nearly $50 billion net loss in the first quarter, the biggest loss ever for the storied company. Okay, well, let's talk about that. The reason for the fact that it's such a big loss is that the way GAAP accounting currently works is that when there is a net decline in an equity portfolio, they count the unrealized losses or unrealized gains going to the income statement, which doesn't make any sense, because if you own $100 of stock and it goes down to $50, but you haven't sold it, right? So it's not a realized gain. Currently, the GAAP accounting was changed recently, a few years ago, where now that would, instead of saying, okay, our book value went down by $50, now it says, oh, we also report a negative $50 loss. So that doesn't really reflect economic reality. So it's one of these weird GAAP accounting rules, which just, it's pretty stupid. And you would hope that an article like this would explain that, so it wasn't just some dramatic thing that they lost all this money, because that doesn't really reflect the economic reality. But let's continue with the story. So Berkshire, which owns companies including Geico, Auto Insure, Burlington Northern Santa Fe Railroad, Dairy Queen, Duracell, and many other financial, industrial, and consumer firms have been hit hard by the COVID-19 pandemic, just like the rest of the market economy. The company said in a regulatory filing Saturday that before the coronavirus hit the United States in mid-March, many of the Berkshire businesses were posting revenue and earnings increases compared to a year ago. But that quickly changed, and the quote is, as efforts to contain the spread of the COVID-19 pandemic accelerated in the second half of March and continued through April, most of our businesses were negatively affected, with the effects to date ranging from relatively minor to severe, Berkshire said in a filing. So the company's overall revenue rose slightly from the quarter to $61.3 billion, but Berkshire said Saturday that the essential business it owns, railroads, utilities, and energy and insurance units, slowed considerably in April. Well, sure, of course. The company added that several of our retailing businesses and certain manufacturing and service businesses are being severely impacted due to closures of facilities where crowds can gather, such as retail stores, restaurants, and entertainment venues. As a result of this massive shift in consumer behavior, Berkshire said that the various subsidiaries have had to furlough employees, cut hourly wages and salaries, and reduce capital spending plans in order to preserve capital. Well, duh. So they said, while we believe that these necessary actions are temporary, we cannot reliably predict when business activities that are numerous and diverse operations will normalize, yada, yada, yada. The company said, we can also not predict how these events will alter the future consumption patterns of consumers and businesses we serve. Okay, so here we go. Way down in the article, this, of course, they scare you in the article, and then they'll put this in, halfway down. Most of the Berkshire losses were attributable to the enormous drops in the value of the companies that Berkshire owns and its investment portfolio, rather than in decline in sales and profits at its own subsidiaries. Berkshire said it wrote down the value of its equity investments by a whopping $54.5 billion. Its operating earnings, a measure that Buffett prefers to focus on, right? This is what's very disingenuous about an article like this. So I'm literally halfway down through this article. No, I'm sorry. I'm more than halfway down through this article. And instead of, the subject line being, equity drop in the portfolio, but operating earnings rose 6% in the quarter, which is actually matters to investors. They say, oh no, the biggest loss in company history, right? It makes headlines, but it's not really reflecting the economic reality of the business. So this is what should be at the top of the article. Berkshire said it wrote down the value of equity investments by a whopping $54.5 billion. Its operating earnings, a measure that Buffett prefers to focus on, rose nearly 6% to $5.9 billion in the quarter. Jesus, right? Yeah, so shares of Berkshire Hathaway are down nearly 20% for the year. Buffett is arguably most famous as an investing guru. And, it talks about Berkshire currently owns large stakes in top American blue chip companies such as Apple, Bank of America, Coca-Cola, Wells Fargo, and Kraft Heinz. He's currently worth about $72 billion, according to Forbes. Berkshire Hathaway has had large losses in the past, but those were attributable more specifically to its own investments rather than a downturn in the broader economy. Just over a year ago, the firm posted what was until now its largest loss because of difficulties at its Kraft Heinz unit, where sales were hit hard as shoppers increasingly shun processed foods. The company posted more than $25 billion of net losses in the fourth quarter of 2018 as it wrote down that position. Investors now are wondering whether Berkshire will look to invest even more in top U.S. firms in light of the COVID-19 outbreak. And after all, the company is sitting on a gigantic pile of cash and disclosed Saturday that it now has $137.3 billion on its balance sheet. The Berkshire Hathaway Shareholder Meeting takes place on Saturday afternoon, just in a little bit from now, and Buffett will take questions from shareholders and a few reporters in a virtual meeting that will be live streamed exclusively at Yahoo Finance. What a junk article. And, it's that kind of reporting that just pisses me off, where, here you have operating earnings growing at 6%, but the headline is largest loss in history of the company. And it becomes this whole dramatic thing. Here's an interesting one. Yeah, Reuters, same thing. Buffett's Berkshire posts nearly $50 billion loss as coronavirus causes pain. It's unfortunate that that's how the business reporting is, but I guess that's what makes headlines and gives you clicks, which gives you advertising revenue. Taking a look online, see if there's any interesting comments. Let's see here. Let's see. I'm looking at there's a message board called the Corner of Berkshire in Fairfax, which for those interested in some online discussion, that's a very good message board to discuss Berkshire Hathaway stuff. See if there's anything worth reporting on here that's interesting. Some interesting comments. Nope, not really. Not really anything interesting there. Let's take a look at Twitter and see what any interesting comments coming up on Twitter. Will Morrison's, who's a CFA, CPA, CFP goes, not sure about Berk 2020. We'll see how exciting it is to watch Buffett on the live stream. I'd prefer to be in Omaha. I hope they have some unique swag available online. Buffett and Munger Jello molds and Buffett cherry Coke cans, etc. My office is like an annual meeting museum. All right. Well, I have some Berkshire swag here. Let me guys show you some Berkshire swag. 1 second. I'm gonna show you something real quick. So guys, check this out. Speaking of Berkshire swag, first up we have a Warren Buffett racing car, and actually you can pull it back and it zooms forward. So that's my Warren Buffett race car right there. Then we have my Warren Buffett bust, and on the back it says Berkshire Hathaway Shareholders Meeting, and on the front, rule number 1, never lose money. Rule number 2, never forget. Rule number 1. Then we have the Warren and Charlie Rubber Ducky collection. And these were from the 50th. I got these a few years ago at the 50th Berkshire Hathaway anniversary. So we got Warren Buffett right here as a rubber duck, and we got Charlie Munger as a rubber duck. And then you can see back Berkshire Hathaway 50th anniversary edition. And then we have some gigantic ones right here, and this is from the 2017 annual meeting. And again, we have a nice big Warren and Charlie. There's that. So we have that. Let's see what else is going on Twitter. Let's take a look. Twitter starts having some very interesting stuff during the Berkshire Hathaway feeds right here. So let's see what else we got. We'll do a Warren Buffett. All right. See the latest tweets from. All right, so in 30 minutes, we are going to start the live stream shareholder meeting. All right, we already know that. Let's see the top tweets. So all the tweets are really about that, he's conserving cash. There was no crazy spending. That's really the big theme here. Let's see if there's any. Berkshire Hathaway still has 137 billion in cash and equivalent instruments. Very interesting that the Oracle of Omaha did not see any of his classic value opportunities in the market decline. Of course, you forget that, as I said earlier, if you look at the last recession, he was doing a lot of preferred deals with companies that needed liquidity. But Charlie Munger is saying the phone isn't ringing. So we could have predicted that. And I think it's likely that companies are going to see if they can get government assistance first this time, as opposed to, because we have all these now government programs helping out businesses that are struggling. They might go to the government first before they go to Berkshire Hathaway this time. I think that's probably at least some of it. Yeah, see, I think people are overreacting. Here's another one from Samir Kalra. Sorry if I'm mispronouncing your name. Q1 stayed out sidelines during the market crash, added 10 billion of cash, wrote off 54 billion existing investments, and then goes, do not follow him or his investment style. Think 100 times before investing in COVID-19 era. Which again, if you're limited to large companies, yes, there may not be things that are that super cheap, but at the smaller level, there's significantly more opportunity, in my opinion. Not investment advice, just my opinion. Well, that seems like everything for now. Just the buildup of cash and the fact that he hasn't bought a lot of stocks and that the market was down a lot and Berkshire didn't do much. So, yeah, that's what it is right now. Let's see if there's any Yeah, there's nothing really else to report or talk about right now. We have about a half hour until the show starts. So, I'm going to take a commercial break, but if there is something that shows up on the Yahoo Finance stream that I think is worth talking about more, I will certainly certainly get back to you guys. So with that, this is Eric Schleien with the Intelligent Investing Podcast, and we'll be back in a little bit. Thanks so much. Hi, it's Eric Schleien with the Intelligent Investing Podcast, and we are back. Having a little technical difficulty. All right, there we go. I muted the mic accidentally. So right now we are watching the Yahoo Finance stream. We still have 52 minutes until showtime, and where we will be able to watch not Buffett and Munger, Buffett and Greg Abel this year. We were talking before the break that Greg Abel is likely to be, at least as certainly a potential successor to Buffett when he dies. So right now on the Yahoo Finance stream, we have a friend and colleague of mine, Whitney Tilson, who's on, and this is actually a recording from the 2019 Berkshire Hathaway meeting. I'm listening right now. So Charlie Munger talks about last year in 2019 that he was a stupid horse's ass for not getting into Alphabet, which is the parent company for Google. And, Charlie has always said all investing is value investing. And, historically they did not have Berkshire has not had a history of investing in technology. But Google, again, is one of those companies where you could relatively predict it'll be around in 10 years from now. They have this virtuous flywheel model. It's, very difficult to not nearly impossible to compete with Google on search. So you could say they're the low-cost producer in search. And, if I was to start a search engine and threw $10 billion to compete with Google, it would literally be like throwing it down the drain. So, and then Google owns YouTube, and they have a bunch of their moonshots. So, last year, if you look at where Google has been valued even the last 5 years, with the kind of forward growth they've had of these double-digit growth in earnings, Google actually was very, very cheap in the 20-ish PE ratio. So, if you can find a company that is, the leader in its field, the low-cost producer, selling at, 25x times earnings. I'll actually look at this real quick. I'm curious in terms of, since they are talking about Google right now, what is the actual historical multiples of Google? Take a look real quick. I'm on Morningstar. Whitney Tilson right now was talking on Yahoo Finance that he, had modeled out some of where the cash flows for companies like Amazon and Google would go, and you can get a target price for that. So, yeah, if I'm looking right now, so if for instance, Google book value is meaningless at Google, right? Because they own a bunch of servers and technology. That's not where the value is going to be. But if we look at Google on a enterprise value basis. So the reason I would use enterprise value is simply because they do hold quite a bit of cash. So on an enterprise value to EBIT basis, they've traded, between, 18 to 24 times enterprise value to EBIT over the last 5 years. And the 5-year average is 21x. So for a company that has been growing at the rate of Google, for instance, Google historically has actually been pretty cheap. And if you got into Google years back, you would have a pretty damn good rate of return. So, that's probably why Charlie said, we were a stupid horse's ass, and, they got to see how powerful Google's model was with Geico, because, you'd have the Geico ads on Google, and they could see how powerful that was. So, there's a missed opportunity there with Google. And they talked last year also at the meeting that they missed the opportunity in Amazon, but that wasn't as obvious, simply because, Charlie Munger and Buffett have talked about that they never predicted Jeff Bezos would have the level of success he did. So you could say Amazon was harder to figure out than Google. I'm listening to the 2019 recording right now. That's on Yahoo Finance. I'm just curious to hear what they're saying. So right now they're talking about that when Buffett's gone, that Berkshire Hathaway can be a place where companies still go to even when they're gone. And that speaks to the culture of the organization. The um, the thing that sometimes people don't understand is that the culture is not created just by a CEO or a manager. It's why a lot of activists fail and a lot of activists burn out, because they'll take over the board of a company and then the new board gets in, but the culture is still the same, and then the strategies fail. And Peter Drucker says, culture eats strategy for breakfast. If you have a culture that is not going to be aligned with the new strategies, this culture will probably destroy the strategies. One of the competitive advantages of Berkshire Hathaway is their culture. And, when Buffett or Munger, when both of them are gone, there's structures put up in place. There's many other people put up in place, all the way down to all their CEOs of all their subsidiaries that are already aligned with the Berkshire culture. They have Berkshire blood in them, as Buffett would say. And they'll have a board of directors that's aligned with the culture. So it ends up not being about Warren Buffett or Charlie Munger. It just looks like that on the surface. But Buffett and Munger couldn't do what Buffett and Munger did if they didn't have a culture to support that. So you could say that Buffett certainly and Munger helped build and develop and foster this culture over 50 years, over the past 50 years. But that's gotten to the point where it's not about Buffett and Munger anymore. So I'm listening now to another thing on Yahoo Finance, and it's a recording of Buffett and Munger from 2019. Let's just listen in. So they're talking about their share buybacks and how they're not salivating. This is from a year ago. They weren't salivating over the stock price, but they think that the buybacks did add value to the Berkshire shareholders. We talked about this earlier in the live stream that, Buffett would prefer to own, full stakes in businesses than grow the stock portfolio. The problem is, the phone has not been ringing, as Charlie Munger said in an interview from last week. So, so the I'm listening at the same time. So the buybacks have just not been enormous because they're still looking to bag that proverbial elephant, looking to buy a very, very large company and buy an entire stake of a very, very large company. And of course, when they do buybacks, they have less ability to do that. But then they're also looking to balance that with having a good cash position. So, if you buy back a lot of stock and then there's an opportunity, the market goes down a lot, you may actually end up hurting shareholders. So Buffett has talked about, he's running this company for, to sustain itself way after he dies. And, he'd like to have a large cash position for when there is havoc in the markets and companies are, calling them up and need support. That's where they're really going to thrive. And so far during this pandemic, as I said earlier, there's been opportunities for the small investor to get into smaller cap and micro cap companies that are just trading at absurdly cheap valuations. The small investor can take advantage of, but that a large business with over $100 billion in cash cannot take advantage of. The small investor has the advantage over Berkshire Hathaway every single time. Where Berkshire is going to thrive is not by buying a 5% stake in a $100 million business or even a $1 billion business. They're going to thrive doing preferred deals, providing companies with liquidity in times of distress. So far, that opportunity set has just not shown up in the current market environment. So they're just holding tight instead of overpaying for businesses. If there's a second wave of corona, if things get worse before they get better, you could still see the market go down quite a bit from here, and valuations for some of the larger companies potentially come down. There's also, certain insurance liabilities that Buffett may not, that they don't know about yet. So they're going to prepare for the worst, and they want to be in a position every single time in every single market disaster where they can step in. They'll never have to be afraid of being over leveraged or not having enough capital to weather through a storm. And right now they're focusing on running this company for the next 100 years and weathering this storm. And if it means that they miss out a little bit on a cheap stock, well, they'll be in a position to buy that proverbial elephant down the road, and they'll be in a position to buy back stock as things stabilize a bit. So sometimes shareholders get frustrated with Buffett and Munger that they're not doing enough, that they're not buying back enough stock. But on the flip side, you can probably count on Berkshire Hathaway being around in 20, 30 years from now when the ebbs and flows of other competitors, there will be the ebbs and flows of other competitors going in and out of the market, especially in insurance. So there is something that Berkshire does very well, and it is the longevity and the trust that they create, which then makes companies want to be part of them and makes companies want to do deals with them. That is their competitive advantage. If they ever were in a position where they were not able to thrive in a disaster and they were not able to put capital to work and do deals with other companies, then their competitive advantage goes away. And that's literally the Berkshire model. So they are very long-term thinkers, and they think long and hard about preserving this Berkshire model. Hi, Kylas, dude. Glad you're on. It's just we have Charles from Paris, France, listening in. Charles, thanks so much for being here. Hope you're safe out in Paris, France right now. Yeah, so this is still kind of the pregame show, and I just encourage you all to follow along on the Yahoo Finance stream. Right now, there's just some interesting clips from the 2019 meeting and some interviews from the 2019 meeting as well. So I'm going to go back on Twitter and see any new updates on Twitter right now. So we're going to be going back and forth throughout Twitter throughout the day to see any interesting tidbits or commentary that come through. We're also going to be relying a lot on the meeting once that starts in 40 minutes and 42 seconds for those that are listening in live right now. Let's look at the top tweets for Warren Buffett. Wow, actually, so thank you guys. The HotMic live stream right now is the top tweet on hashtag Warren Buffett right now on Twitter. So thank you guys very much. That is quite the honor to have that. And thank you, HotMic, for retweeting this live stream. And I hope it's the first of many to come. Let's look at the hashtag for BRK 2020. And we're also the top hashtag right now for BRK 2020. All right, let's see what we got here. Nothing really new so far. Let's go to the news and see if there's anything interesting, newsworthy right now that's getting reported. I get the feeling right now there's going to be a little bit of a lull in the journalism as we prepare for the actual meeting today. But it's really great to have everyone on. Oh, Charles, I'm very glad all is okay in Paris. Please stay safe. And I hope you enjoy this stream and enjoy the Yahoo Finance stream as well today. Let's see what we got for the news. Anything interesting on the news? So we have, so an NBC thing. Let's see. Yeah, Market Watch comes out right now. And again, similar story to what we reported about before the commercial break. Sits on a huge pile of Warren Buffett's company sits on a huge pile of cash after Berkshire reported a nearly $50 billion loss. It's just so misleading the way they're writing this. And it's funny. Like Buffett literally complains about the new GAAP rules, from a few years ago where, we talked about this earlier, but for those just listening in, when you have an unrealized gain or loss in your portfolio, that now gets passed through into the income statement, which just doesn't make any sense. Because if you have, $1 million in the portfolio, and it goes down by 500,000, you're now reporting a $500,000 loss, even if you haven't realized those losses. a little wacky. So you literally have to look at operating earnings, because the actual earnings day to day or quarter to quarter for Berkshire Hathaway are going to just have tremendous upswings and downswings, and it's not going to actually reflect the economic reality of the operating business. So yes, and so the headline is very misleading, of course, but then they say Buffett's company reported a nearly $50 billion loss on Saturday because of a huge drop in the paper value of its investments. Though the company is still sitting on a, so at least they put that in the top of the article. I'll give them credit for that. There was an article we read before, and you had to go 3/4 of the way down into the article to see, if you didn't know what that loss was from, you'd have to actually go that far down into the article before they even mention that it was just a loss on their portfolio. Charles asked me, how many times, Eric, have you been to Omaha? I have been every year since 2006. So this is the very first year that I am not in Omaha. This would have been my 15th year in a row going. So a little bummed to be at home in Philadelphia right now, as opposed to on a road trip. I typically like to drive on my road trip to Omaha. Typically the itinerary for Omaha is I will, go to the Whitney Tilson party, which will always be on a Friday. And, before that, there's a thing called the Yellow Burger party, which I used to host, actually. And now, Alex Bossert typically hosts that. And so that'll be Friday, and it's a lot of fun. And we hang out with a lot of great people, and we always meet new people as well. And then on Saturday is the meeting. So right now we would be in our seats, anxiously awaiting the company movie, which goes on for about an hour, starts, and that's only something available at the meeting itself. And those company movies are so funny and so hilarious, and they get actors to come in, and they don't get paid for their time. The agreement is it all stays confidential and private. So the company movies are amazing. And then the meeting starts, and I would be in Omaha right now in the meeting. And then after the meeting, we'll usually take a nap because we're exhausted, and then do dinner. Typically, my Saturday dinner is at Upstream in the Old Market. And then Sunday, we would have the Markel brunch. Also, usually on the weekend, I would go to the Trupanion Q&A, and Daryl Rawlings, the CEO of Trupanion, does a Q&A. There's usually a few other businesses, SiteStar, which is now Enterprise Diversified. They've done stuff before. So it's a really nice little thing to meet other like-minded investors. Let's see. I'm getting a few text messages. All right. Well, shout out to Brian Langus. He's a wonderful investor in Canada who I met in the Charlie Munger's Daily Journal meeting a few years ago. And he goes, he'd like to actually come onto the broadcast sometime. So he can't do it today, but would love to get him a profile so he could come on as well. So we are just only 34 minutes away. We're gonna take a quick commercial break, and then we will be back. So with that, hope you guys are enjoying the broadcast. If you guys have any questions or things you'd like me to address, things you'd like me to answer, anything goes, and happy to talk about anything. So we'll be back in just a little bit. Have a good one, guys. All right. See ya. Hi, it's Eric Schleien. You're listening back to the Intelligent Investing Podcast live on HotMic. And just coming back on, if you go to the Yahoo Finance live stream right now, we have on Mario Gabelli recording from 2019. And he's talking about how some people want to see Ted and Todd, the portfolio managers at Berkshire Hathaway right now, be the ones that take over for Buffett. And of course, he's explaining that these are investment managers, right? And and Berkshire's is mostly a mix of subsidiary companies now, so that it wouldn't really be appropriate to have the investment managers be running the actual operations of the business. And then he was also asked about last year with the Kraft Heinz questions for Berkshire, and he thought those questions were overdone. I think with Kraft Heinz, though, it's interesting, because Buffett brought 3G in to talk about Kraft Heinz, or to help make it more efficient, and there was lots of cost cutting, and there was the concern that essentially Kraft Heinz was cutting things to the bone, and it actually ended up hurting the business. Now, I was very, very not only skeptical, but was very critical about what 3G was doing at Kraft Heinz. And I got a lot of flack at the time because 3G had such a good reputation. Who am I to be going against what 3G is saying, or what 3G is doing? But, with Kraft Heinz, you had some real deep-seated issues. And to think that the solution was just to cut a bunch of costs wasn't going to save the day. There was a lot of legacy management and old ways of thinking. You can see this with many other old legacy companies. I'll give you one example, is the advertising agencies. And this is not Berkshire related, but the principles still apply. So, you look at these companies like Omnicom, and, a few of these other publicly traded advertising businesses. I think advertising businesses where there are today is similar to where newspapers were in the late 90s, where there's these old models of advertising, and they think that all you have to do is just buy up a bunch of small advertisers and that's how you grow. But you can, you have a college student who knows how to use Facebook ads or Google ads, and they can, outperform what these professional advertising agencies are doing, and do it at a real fraction of the price. And these advertising agencies think that if you just, buy a bunch of small companies, you'll be able to make it work. But then, of course, you need to actually consolidate them in. There's going to be cultural clashes. So again, here's another example of where, the culture, and in this case, whether it's an advertising business or in this case, Kraft Heinz, which is Berkshire related, if you had impacted the culture at Kraft Heinz, would make more of a difference than just simply cutting costs. Like the high costs and the high expenses as a percentage of revenues was a byproduct of the lack of innovation at Kraft Heinz, not the other way around. So you're not getting to the root cause of the issue. And I think a lot of the time, we just talked about this before the last break. A lot of shareholder activists, they get very disappointed and frustrated and often burnt out when they find out that just because they replaced the board of directors doesn't mean that they actually impacted the culture. And believe it or not, just because you're the CEO doesn't mean that you're like a slave owner, and you can't just force employees to take on different mindsets and certain psychology. So just because you're the CEO of a company does not mean that you can be effective with getting employees to do things. And this goes back to before, where I'm not concerned that when Buffett dies, because the culture is already there. It's not about Buffett. That's the whole point. It's a very decentralized structure and a very tight-knit, high-quality culture. So Charles has a few questions from Paris, and he goes, what are your best shares and worst ones? Thank you. Charles, I'm not exactly sure what you mean there. I'm not sure what you mean by that. And Charles goes, I like your investment philosophy. How many customers do you advise? Charles, I would recommend you look at the ADV filings of my company, Granite State Capital Management. It's currently if you include joint couples, it's more than 10. I think it's something like 14. But but there's a few more people coming on board right now, so the number's slightly higher than that. So it's going to be slightly higher than whatever the last my last public filing of the company was. So just for public information, if you go to the Granite State Capital Management ADV Form ADV filings, which you just look at, I disclose all the all my clients, assets under management, all of that. So, but I'm more than happy to talk to you privately if you wanted to see the exact number. But anyway, going back to the stream, I don't want this to be about promoting anything about me or promoting my business. We are here to talk about the Berkshire Hathaway meeting. If you guys have any questions about the Berkshire meeting, anything that doesn't make sense, anything you want to know about, I'm here. I'm going to just write happy to answer any and all Berkshire related questions today. This is a lot of fun. This is awesome. So let's see where they're now going into. This is funny. So if you go on to the Yahoo Finance stream right now for Berkshire, there is a map. Because you get 30 to 40,000 people coming into Omaha, and there is a map right now saying how far have you traveled to come to the meeting. Now, of course, this was 2019, so no one's really traveling far this year. We're all quarantined and watching from our homes. But it's just funny that they're showing where everyone's traveled from, and people come from all over to the Berkshire Hathaway meeting. Let's see. I'm looking on Twitter again to see if there's anything interesting. Let's see what we got here. There's also another hashtag I'm looking up called YF Buffett, which just stands for Yahoo Finance Buffett. And let's see if anything comes up on here. Okay, so as of 26 seconds ago, we have a new tweet. And this says, highlight the thing that really. So this is a quote from my friend and colleague, Whitney Tilson. Hi, Whitney. Just give you a little plug here. And Whitney goes, the thing that really jumped out at me in their Q1 earnings is the complete lack of buying back their own stock. Now, I think that, this is something we've already discussed before our last commercial break. But, again, Buffett is looking for that proverbial elephant. I think it's likely that he thinks there might be future opportunity as it becomes clear who the government is going to support and who the government's not going to support, where then Buffett can use some of that cash to, actually help support other companies that may not be able to get other government assistance. You can actually tweet that right now. Buffett is waiting for things to clear up, and when government assistance runs out, companies can come to Buffett, Berkshire, and they will have ample cash to impact and help businesses. Also waiting for proverbial elephant. Large companies not down as much as small. My 2 cents. Okay. Comment on Twitter there for Yahoo Finance and for Whitney. Anything else? Let's see. Anything else interesting before the meeting starts? We have 10 minutes and 30 seconds till showtime, guys. So here's another post from Yahoo Finance that just as of 13 minutes ago. Highlight. He goes, so Warren Buffett goes, I've got 99% of my money, Warren Buffett says, it appeals to a lot of people who feel very comfortable with the fact we'll never blow it. They can feel very certain relative to almost any company that we won't be at the bottom quartile for performance. And that's, again, something we've talked about already during the show, which is that, Buffett, Berkshire Hathaway is being run for their investors. A lot of their investors are already very wealthy. Buffett, of course, has already made, he's already a billionaire. So they want to be conservative. They want to protect that reputation. They want to, look, if you go into a crisis and then they run out of cash and now there's a second wave and now there's a real opportunity to help companies that are struggling, and Berkshire Hathaway can't be that lender or can't, buy some preferred stock or do some kind of deal to help companies stay afloat, that's going to have a real impact on Berkshire's reputation going forward with future market downturns. So, that's Buffett's trying to preserve his reputation, preserve the reputation of Berkshire Hathaway, and that's the competitive advantage. The competitive advantage is they can be fine no matter the market environment. If there is, crazy earthquakes or pandemics or whatever it is, Berkshire Hathaway will be fine, and that is why companies are willing to sell to Berkshire for cheaper. They know they have a permanent home for their businesses. We just had on the CEO of Brooks running shoes, and from 2019, he talks about how it was such a great home to be part of the Berkshire family. So you just hear this from CEOs that they like to be part of the Berkshire family because they have ample liquidity. They get better rates on borrowing, and they know that the company is not going away. So there's that permanent home for them. Let's see what's all right. So, we have now 8 minutes till showtime. It's pretty exciting. Let's just see if there's any other interesting comments online right now. Let's see here. So here is a comment on a message board of Corner, Berkshire, and Fairfax. P-Tech goes, haven't looked at these results yet, but I'm starting to think Buffett's insistence on deploying capital largely in the United States and his still substantial reliance on himself for investing decisions is a major failing. Interesting. It is very hard for one man to deploy $150 billion sensibly in one country, even in the United States. Even if liquidity was not an issue, the size of the necessary circle of competence is. But a larger team, carefully chosen and operating on the same principles, and investing globally would probably be able to do it. And it would be a major advantage to have deep knowledge of non-US markets at a time when the United States is expensive at the index level. In the meantime, the machine rolls on, and I'm not complaining. I think there is a point to be made. As long as it was individuals that could make their own independent decisions. And, say you had someone who just specialized in Australian equities, someone who just specialized in equities in Europe, maybe, or in India, right? There could be some competitive advantage there. I don't think that's not a bad idea. You look at companies like Brookfield Asset Management, and it's not that Bruce Flatt, the CEO there, is making all the decisions. He has a team of people in all different, in I believe almost every continent in the world. And they're in almost every major city in the world, and they have deep on-the-ground knowledge. Now, that's a little different because they're dealing with real estate and other kinds of real assets like infrastructure. But I do think there's something to be said if you have someone who is on the ground in India or on the ground in China, and they can make investment decisions. It could be actually kind of an interesting thing as long as they were independent decisions. So P-Tech, not a bad idea. Let's see what else, if there's anything interesting going on right now. Looks like people on Twitter are just getting excited for this meeting to start. We start in 5 minutes and 57 seconds. This is pretty exciting and weird times. Charlie Munger is not going to be here today. It's going to be Greg, Abel, and Buffett. Well, it looks like someone liked my reply on Twitter, so I'm not that crazy. Maybe that's an interesting speculation. So let's see what else. I think that Buffett has shown tremendous patience going through this pandemic, like he has in other disasters. People forget. We talked about this before. People forget that Buffett has had patience throughout the last recession. He wasn't buying up equities at the bottom. He was making deals with companies. The difference this time is that the companies aren't calling him. Charlie Munger literally said, let's see if I can find that article, that the phone is not ringing. The phone is not ringing off the hook. So let's see here. If we go to that article, right, let's see here. Yeah, so CNBC, they had posted an article a few days ago with just some Charlie Munger quotes. So I'll get to that right before we start this meeting. Since Charlie Munger will not be here, let's get a few Munger quotes in of just some recent economic and financial news. So the title of this CNBC article is, quote, "Frozen companies are not calling Berkshire Hathaway for rescue investments," Charlie Munger says. So this was an April 17th article. And the key points are, quote, "Everybody's just frozen and the phone is not ringing off the hook." That's Charlie Munger quoting. And he goes, "Take the airlines. They don't know what the hell's doing." And you could see it in Charlie's voice. You go, "Take the airlines. They don't know what the hell's doing." Right? That would be the way he says it. And then he adds, "They've never seen anything like it. Their playbook doesn't even have this as a possibility." So they say, CNBC goes, "Speculation about what Berkshire Hathaway's Warren Buffett is doing during the corona crisis is a common topic among investors these days, with most expecting the Oracle of Omaha to make a classic value purchase during this tumultuous time, or a rescue cash infusion to a struggling company he likes over the long term." Remember, now what I said was a lot of these companies are still trying to get government assistance. So Berkshire Hathaway is still going to be a second option to the government because the government's going to probably give them a better deal than Berkshire Hathaway would. So let's see what else they say. "Well, it doesn't appear any of that's going on soon or going to happen soon." Well, duh. "Berkshire's phone has not been ringing with corporate executives begging for rescue capital as the coronavirus outbreak has left everyone in shock and confused about what their next step will be," Charlie Munger told the Wall Street Journal. "Everybody's just frozen and the phone is not ringing off the hook," said Munger, Berkshire Hathaway's vice chairman and Buffett's longtime business partner. "Take the airlines. They don't know what the hell's doing. They've never seen anything like it. Their playbook doesn't have this possibility," Munger said. Berkshire Hathaway is a shareholder in airlines such as Delta and Southwest, amongst others. Now, one thing about Delta is they've sold some of Delta to go below the 10% the 10% threshold, and what that is, they don't have to report on every move of Delta now if they're under 10%. So it could be that he's going to sell the rest, and maybe that's something we'll find out in their next filing. Maybe that's something Buffett will talk about today. I'd imagine there's going to be some questions about airlines today. I would imagine that is the case. Let's see here. So we are going to just take a real quick break and come back for the meeting. There's nothing else in the article that we haven't talked about earlier. So I'm going to submit a quick question to Becky Quick on CNBC. And maybe it'll even get to Buffett this year. I have not asked Buffett a question in almost 10 years, or more than actually. All right, well, with that further ado, we will be back in just a few minutes. Have a good one. All right, we have just started the Berkshire 2020 meeting. Buffett is right now on stage and they're social distancing. Greg Abel and Buffett are far apart from each other. Let's listen in. So I'm just going to watch the feed with all you guys and when something interesting happens, I'll report. So right now Buffett looks at the age of the United States, 231 years old. Combined ages of Munger and Buffett, 185. Talking about how the United States is a very large, young country. He's saying, our life experiences combined, and then we throw this young guy, Greg Abel. So between Charlie Warren and Greg Abel, their life experience exceeds the length of that the United States has been around. And then Buffett saying that what they've accomplished is just incredible, in terms of what we've accomplished as a country. Now he's trying to estimate. Let's see what he's trying to estimate here. So he's showing the population of 1790 is 3.9 million people, which 0.6 million of those were slaves, and about half of 1% of the population of the planet lived in our 13 colonies, 13 states. Really, they were colonies, but that's okay. He's saying states. All right, Buffett's correcting himself. He's saying there's closer to 0.7 million people that were slaves during that time. Tone STL24 on Twitter just goes, Warren Buffett is letting Berkshire Hathaway throw away employees and giving them nothing while they keep feeding the people that bring nothing to the table and more money. They care nothing of their employees that worked hard. They just want to line their pockets. Well, you can see people are getting angry at that from the outside of things. From a minute ago, interesting remarks early from Buffett. Annual meeting given praise to both Dr. Fauci and Bill Gates, referencing 2008 when the economy went off the tracks. This time, 2020, we pulled the economic train off the tracks, and he references March Madness as well. Charlie Daytrader goes, Warren is like the financial version of Yoda. Here's a drinking game. Take a shot every time Warren licks his lips. LOL. I am not going to play that drinking game right now, but you guys are welcome to. Coffee. Buffett's still talking about how extraordinary our country is for how young it is. Right, so we move to the next slide. So he says that the wealth of the country in 1789 is estimated at $1 billion. The Louisiana Purchase in 1803 was $15 million, so that's 3 cents per acre for 25% of the lower 48 only 217 years ago. The source is Wild Guess of Warren Buffett. Such a funny guy. saying there's imprecise figures with data collection. That's why it's the wild guess. Because you can figure out how many mules were in the country, but keep watching. No, I wish guys could show you the actual live stream going on, but for copyright issues, I'm not allowed to share that through the broadcast. So I'll commentate, but this is a live broadcast through HotMic. So please follow along with me on the Yahoo Finance broadcast. And we have Guy Spear following me. Hi, Guy. Thanks for coming on. I appreciate it. Big shout out to Guy Spear. He runs Aquamarine Capital. He has a great. We did a great podcast a while back. I'm actually going to share a podcast link in the chat with Guy Spear. He gave such a wonderful. We had such a wonderful conversation together, and he's such an extraordinary human being. He treats his investors very well too. Someone I really respect and admire a lot. So I'll put the follow. Those of you watching in here and myself had a wonderful conversation you can find here. Alright, so I just posted a link to the Guy Spear podcast. Thank you, Guy. Big shout out to you. Enjoy the meeting. Let's keep watching here. Buffett's talking about the never selling the mineral rights of land. Telling a story about that. Now, if you guys have any questions, you guys can email me and intelligentinvesting@gmail.com. You guys can ask questions on here. And we're just going to keep moving on. We're going to keep watching together. He's still talking about the Louisiana Purchase. Love the passion with Buffett. We just, we learn about the Louisiana Purchase, but he's going into the, price per acreage and how much in gold it costs and calculating the wealth of the United States. So let's keep listening. So Buffett's talking about the Louisiana Purchase ended up being a bargain. Good rate of return. We're going to the next slide here. What's happening the wealth of the country in 2020? So he's saying that we have well over $1 trillion now in wealth, at least $100,000 per each original dollar. So we've literally multiplied our wealth in just a few centuries by 100,000-fold, perhaps a 5,000 for one gain in real terms. So inflation adjusted, still a 5,000 to 1 gain in real terms. Really extraordinary feat. CJ asks, is it possible to go back and watch the meeting at a later time? CJ, yes, I would imagine, I can't speak for Yahoo Finance, but generally you can find recordings of old meetings. CNBC will usually put a recording as well on the meeting. So whether it's CNBC, Yahoo Finance, or even YouTube, there ends up being a recording of the meeting at a later time. So CJ, don't worry if you can't be at the meeting the entire time. This live stream too is going to be up again, and you'll be able to watch the old footage of this live stream. So anyway, CJ, thank you so much for being here, and you can come and watch it another time. Absolutely. And, please give me a follow. He's talking about that there's been about 20-to-1 inflation in commodities, yet the average wealth has gone up by, 100,000-fold. Hence why commodities tend to be a pretty bad investment over the long term. CJ goes, cool, thanks. I can listen as I work, just not both this and the meeting. Totally got it, CJ. Well, please, you can oscillate back and forth, and but I would encourage you, if you only had to pick one, go to the meeting. That's, if you want to get the real juice of it, go to the meeting. Buffett's now saying we've hit a bump in the road. Some serious bumps in the road. Now he's saying in 1861, we had about 31 million people. And 4 million of those were slaves. Very interesting. Buffett just going into the history of the country. He's going to make some big points and principles here, and some big takeaways. So stay tuned for that. And then, of course, he's now quoting the President of the United States in 1863 at Gettysburg's. This is now when the United States was 74 years old, and, quote, testing whether that nation or any nation so conceived and so dedicated can long endure. So, officially, we have taken away so far that Buffett has officially endorsed Thomas Jefferson's 1803 Louisiana Purchase. So, AKA, Thomas Jefferson was a value investor. Just saying. Whether he knew it or not. Now, Buffett is saying that, the economy will overcome the coronavirus and that nothing could basically stop America. CNBC is now reporting that, of just his recent words. So Buffett has so far, he goes, Warren Buffett, this is from Jerry Miller at CNBC. Warren Buffett has said Saturday, he is optimistic that the United States economy will reemerge after being dealt the body blow by the coronavirus pandemic. Quote, nothing can basically stop America, said Buffett at the virtual shareholders meeting. The American miracle, the American magic has always prevailed, and it will do so again. So we'll continue on with our live broadcast of commentary of the Berkshire Hathaway live stream, and we're going to continue on. So we're just listening right now. He says about 6% of the group of between 18 and 60, between ages 18 and 60 were killed during the Civil War. So he said the 2020 equivalent of that would be about 4 million. So this is important, guys. He's saying that if we had Civil War equivalents today in 2020, about 4 million males between ages 18 and 60 would have been killed. 4 million. That's a lot of people. Tom Spain goes, we're off. Burke 2020, Warren looking strong. Greg Abel looks nervous, needs to open some peanut brittle, and he will be just fine. There you go. It's good sage advice right there. All right, he's moving on another crisis now, guys. That hit the country. We're talking about September 3rd, 1929. The United States, right, for some context, the United States is at 140 years of age at this time, and this is when it leads. We're getting into the Great Depression. The Dow is at 381.17. And Buffett said actually the second most important average in the time was the New York Times average, which doesn't exist anymore. I didn't even know there was a New York Times average. Like learning something new at Berkshire 2020. Kind of hard not to learn something at these meetings. We are 2 hours and 22 minutes into this live stream. This has been a lot of fun, guys. We're just getting started. This is gonna be an all-day event, for Berk 2020. Looking at any new Twitter, new interesting things on Twitter right here. You guys want to follow along? YF Buffett. I like this. This is great. Sean Driscoll goes, I'm going to start doing my PowerPoint decks like Warren Buffett. No frills, no colors, no cool fonts, not even bullet points. This guy is a legend. All right, here we go. Dow Jones, 11/13/29. So right, November 13th, Dow drops to 198.69. That's a decline of 48% at the low. And then Rahm Emanuel says, right, you never want a serious crisis to go to waste. Buffett's recommending the Great Crash. All right, Buffett's talking about some personal stuff now. JJA joined. JJA, welcome to the live broadcast of the Berkshire Hathaway meeting. We're just watching the Yahoo Finance feed and giving commentary and input when there's stuff to talk about. So thanks for joining in. But it's very clear Buffett is very bullish on the future of the United States, and I think he really wants people to view things for the long term and say, we've hit some bumps, but we'll get out of this just fine. Interesting, we haven't even talked about the business results yet. We're still talking about American history. But you can tell he's just such a wealth of knowledge and loves talking about this stuff. So I think where we might be going with this, if I had to predict, is that Buffett is going to go through a giant example of U.S. history. So we have a U.S. history teacher right now in Omaha teaching the entire country United States history from his point of view and giving a context that we will be fine, and here's the entire history of this country, and we've gone through all kinds of crazy stuff before. But before he said, just a few minutes ago, he was saying, I think it's reasonable to say that the U.S. in real terms has increased in wealth at something in the area of 5,000 for one, which is really, it's mind-blowing in a country that had a bunch of raw land. And this just speaks to, why Buffett encourages the investment in American business and saying you don't want to bet against America. And it's also why he typically discourages investments in commodities like gold, where, he says you want to be investing in assets that produce something. And, the long-term charts, if you buy profitable businesses that are growing over time versus speculating on a commodity where the only way to make money is that you have to hope someone buys it at a higher price than you did, but it's not actually producing any cash flows, purchasing businesses at good prices will generally outperform a commodity that isn't producing anything. So now Buffett's talking about, and the Dow Jones in 1932 hit a low point at 41.22 after his birth, and that $1,000 had become $170 in less than 2 years. Oh, good, CJ. Yeah, the history's been a great lesson so far, right? Buffett's talking about his dad going to the bank, and the bank had a sign on that was closed. Buffett monologue is fascinating, isn't it, guys? So, recently he's been talking about his father, Buffett's dad, selling stocks at the time of the Wall Street crash. And, Buffett says when stocks fall by 48%, you really don't feel like going out to see the people you sold them to. his dad was a stockbroker. So his father stayed home, and warrant was the result of that period of self-isolation. Kind of interesting. So kind of interesting that Buffett literally born into an environment where stocks were crashing, and in a period where there was self-isolation because his dad wanted to stay home and didn't want to see the people he sold stocks to when stocks were down by almost 50%. Kind of interesting. All right, see what else. So it really just shows too, Buffett talking about this stock history that, if Buffett had been given $1,000 just 10 days after he was born, it would have been worth $170 less than 2 years later as a result of the Great Depression. However, he also thinks the FDIC would have been around and things would have been better. Buffett's saying the FDIC has not cost the taxpayer a dime. And that the FDIC really is a mutual insurance company backed by the banks. Currently holds $100 billion, and it's consisting of premiums. Not like an insurance company. It's talking about the peace of mind that is given to people. Buffett's saying that depression lasted a lot longer in the minds of people than it actually did with its effects. And he said that through an involuntary manner, we've adopted Keynesian economics. I know you guys might want me to keep saying something every moment, but we're just listening in. So again, if there's something big revelation or something really interesting, we'll talk about it more. But let's keep watching together. So what's interesting right now, he's saying that after more than 20 years, a buyer on my day of birth, Buffett's day of birth, finally gets even through, though dividends had been received. So it took 20 years from Buffett's birth to break even. If you had just bought, if you owned, there was no index funds back then, but if you owned the entire Dow. Liz Clayman just said, if I had a guess, Buffett is making a big windup to eventually say that the Federal Reserve Chief Jay Powell's moves post-COVID-19 have saved the U.S. from a Great Depression, Part 2. Just a guess. Developing, ... All right, we'll see. Buffett just did say, though, that, if we can endure a Great Depression and come out fine, we'll endure a few months and maybe a few months more of the corona issue. Eddie, welcome to the live feed. We are just discussing the Berkshire Hathaway meeting, and we're listening in on Yahoo Finance. So when interesting things come up on Twitter, or, on the internet, or Buffett says something interesting, I'll be commenting about it. So the best way to listen to this feed is turn up the Yahoo Finance feed on your computer, your iPad, or however you like to listen to it. And just keep this HotMic stream up, and when there's something interesting to report or talk about that I feel I can actually add value to and not just talk for the sake of talking, I'll be able to, add and provide some value to the meeting. So thank you, Eddie, for joining. Try something real quick. Smart. I'm gonna just grab a photo for social media real quick. This live feed. Very cool technology. So I've been doing my podcast, guys, for about 3 years now. I have close to 200,000 downloads, and this is our first of the live stream. So I hope you guys are enjoying it so far. I want to take a picture for history. All right, cool. So Buffett's now talking about the American tailwind at full force today. The Dow is above 24,000 and $100 for every dollar since the fellow you are looking at finished college. Kind of amazing that if you just owned an index fund, right? You got no index funds back then, but if you just owned the market and literally just since college, you're up 100 times your money for doing nothing. Kind of awesome. It just speaks to the power. It speaks to the power of compounding. Let's see what else we got here. Now, who was expecting Buffett to be giving history lessons today? But he really makes the economy so clear in the way he talks about everything. So, really enjoying this so far. So as I alluded to before, and he just said it, never bet against America. Did I tell you that was coming? God, it's sick. It's like I've been studying Buffett now for 15 years, where sometimes I will literally be able to know what he's going to say before he actually says it. Not magic, it's just he's so consistent with the way he thinks and the way he talks. Like you knew this is where it was coming. So yeah, he's saying never bet against America. Now, Buffett's saying that some of you guys are going to be tempted to argue with me about this. And he's saying that, we're imperfect in many ways, but that overall you shouldn't be betting against America. So he says in 2020, we're now a better country as well as an incredibly more wealthy country than we were in 1789. And this is where it comes down to again. We have pandemics, we've had depressions, but if you are to buy into businesses that are generating free cash flow and can buy them at a good price, you will do better over time than holding cash or holding other kinds of assets that don't produce anything, like gold or palladium or coins. Now he's quoting our declaration that we hold these truths to be self-evident that all men are created equal, ... But then he says that in 1790, the first census counts more than 15% of population held as slaves 14 years later. Which again just speaks to the principle that we haven't been perfect as a country, but you don't, and I think what he's alluding to here is you don't want to be throwing out the golden goose that lays the eggs just because the goose isn't perfect. Look something up here. Right. He's saying, I don't see how you can reconcile liberty with the idea that 15% of the population was enslaved. And it's totally true. And then it took us a very long time to get out of that. Or as he would say, partially correct that issue, and took a civil war. And losing literally 6% of our population to do it. "131 years until women were guaranteed the right to vote for our country's leaders, and it took 61 more years until a woman was allowed to join 8 males in the Supreme Court. In the meantime, 33 men had been appointed." So again, we're not perfect, but the American foundation, we're this, you don't want to be throwing out the golden goose that lays out that lays the golden eggs, because there's some things that are imperfect about our structure and imperfect about our history. And to be betting against America because of a pandemic that will be short term in the grand scheme of things, you're going to negatively impact your overall wealth in decades from now. And if you are a small investor, there is a greater opportunity, and this is what I'm at, there's a greater opportunity as a smaller investor where your opportunity set is significantly wider than what Berkshire Hathaway is able to invest in. And Buffett said that to me personally. Years ago at a Berkshire Hathaway meeting, when I asked him about if he would be doing similar stuff to the Buffett partnerships, back in the 50s and 60s, and investing in more of those kinds of really cheap stocks than some of the larger companies he owns today, and he said absolutely. So, there really is an opportunity for the small investor to take advantage of market panics and market downturns in ways that Berkshire Hathaway can't anymore. That's the real edge small investors have.
Against that. It does.
You guys want to check out stuff going on Twitter, check out a few hashtags. So I'll put them in the chat right now. Good Twitter hashtags. Do Warren Buffett, BRK 2020, and then we also have YF Buffett, stands for Yahoo Finance Buffett. If you want to follow those along with me too, and anything kind of cool or interesting that you guys see, feel free to share. But this is what I'm following as well. And then I'm also following a Berkshire Hathaway it's a forum category on Berkshire Hathaway, which I'm also posting in there for some updates besides the Yahoo Finance feed, if you guys want to follow along. Buffett's still saying, though, we have a long way to go in creating an even wealthier and more equitable society, but never, never bet against America. Oh, man. Now we're moving on to the subject of what he doesn't know. I'm going to take a little stretch break while we do that. I don't need to do a commercial. Do a little stretch there. Now, Buffett is saying he doesn't believe anyone knows what the market is going to do. But again, he's been very consistent of that. We can't predict what the market's going to do. We can't predict what interest rates are going to do. but you can generally say with general accuracy that over time the market will go up, and if you can find businesses that are mispriced in some way, or even fairly priced but have a lot of growth ahead of them, you'll do fairly well. And if you're a smaller investor, you have a significant edge over Berkshire Hathaway. Buffett is saying you have to be careful of how you bet on America. Looking at a Twitter thing real quick. Oh. We're going to get some context now in terms of the present news. Buffett finds something interesting, so let's see what he has to say here. He wants us to go to YouTube. All right, YouTube link, guys. Buffett is now telling us to go on YouTube. There is a milestone right there. Who would have thought Buffett's going to be directing us to videos on YouTube? Buffett recommendation. Here we go. Check out Germs Don't Have Borders, recommended by Buffett himself. YouTube recommendation from Sam Noon. Sam Nunn. Sorry, Sam, if I mispronounced your name there. I think I did. Dacus says, now it's 99% who are enslaved by the other 1%. Warren Buffett. Okay. Buffett talks about never get bet against America, and then some Truth Raider goes, then why did you sell 10% of your stake in U.S. Airlines? Okay, buddy. All right, not that simple, but okay. It'll be interesting to see, what was behind the airline sales. I have a few speculations. I think, it could be that, he said he wouldn't buy an airplane in full, but you never know. It could be that he just can't figure out how they're going to be capitalized coming out of this. They're going to need government assistance and equity is going to be impacted. Could be that. Could be that there's some regulatory thing where by selling under 10%, it makes it easier for the airlines to get help. I don't know the answer. I don't think anyone does except for Buffett why he did that. Or maybe this thesis just changed for him. And it really seems like the airlines don't know what they're doing here. And the intrinsic value ranges are wider than he originally thought. It could be that as well. I don't know. I can tell you personally, I sold my Delta stake shortly before Berkshire actually announced that they were selling down, and I did it because I didn't know what Delta's equity would look like after we came out of this pandemic, and what kind of government assistance they may need depending on how long this went, which then could significantly impact the intrinsic value of the business. So it went from looking really cheap to looking a little too hard, and I sold it. And maybe I'll regret that decision, but I like to invest in things that are simple and easy to understand, and it got a little too difficult for me, so I sold it for other things. He's talking about that you don't want to be using borrowed money to buy investments because of these crazy market declines that could happen. Now, I don't fully agree with that. I think if you're on a little bit of leverage and you have a long-term mindset, then I'm just talking about a little bit of leverage, not to be highly levered up, but to borrow a little bit of money at a brokerage firm that's going to charge you a low interest rate to borrow, to be slightly levered up, especially if you're finding bargains. I think you end up actually doing a little. You'll increase your performance without taking unnecessary risk. Now, of course, if you're speculating in stocks and buying things that have a high chance of going to zero, then no, don't borrow money. But even owning Berkshire Hathaway, I'd say on 1.1 times margin, you would have done much better and very well. Now, of course, if you were levered up 2-to-1 on the times where Berkshire Hathaway was down 50%, you would have been wiped out. So, that's my view on things, and especially if you're levered slightly and you're always adding money to your account every month or every quarter or every week, it doesn't hurt as a younger investor to have a slightly little bit of leverage, especially if you're using a discount broker like Interactive Brokers that charges low interest rates for margin. Now, we're going to keep continuing on with our Berkshire Hathaway coverage throughout the day. We are going to take a quick commercial break, but that doesn't mean you have to stop listening to the Yahoo Finance stream. It's still going on. So we're going to take a commercial break just for a few minutes, and then we will be right back. So I hope you guys are enjoying this so far and happy to get any feedback or comments or any questions that you have. And I'll be back on in a few minutes. And we are back listening to the Berkshire Hathaway 2020 meeting live stream through Yahoo Finance. And we're now 3 hours into the show. Buffett's just talking about owning, stocks for the long term, not caring about the day-to-day movements, and not using the stock market as a means for speculation. So a lot of the old adage and the old wisdom that Buffett typically talks about. So let's see any updates with here. Here's a comment. Buffett has been talking. This comes from Wesco Burke at corner Berkshire Fairfax, and he says Buffett has been talking for an hour straight so far, very lucid. He seems the same as usual, still brilliant, smiley face. Loomis, I'm hoping, is wrong about it being a lot shorter this time. Buffett hasn't even gotten to the Q&A yet. Should last, I'm guessing, about 3 hours. Not bad to hear from Buffett for 3 hours. Okay, let's see here. Now he's talking about the Mr. Market analogy. It's almost like he's taking all his wisdom forever and combining it in one long monologue. You almost wonder if he knows, he's old and getting up there, and this might be one of his last Berkshire meetings before he dies, and he's just trying to set the record on everything. That's possible. He doesn't do monologues this long typically. I think Buffett is not only looking to explain what's going on, but he's really trying to share accumulation of his wisdom over the decades into providing some context for his legacy and saying all his cumulative wisdom in one meeting. It's kind of wonderful to watch. One of the most brilliant things Buffett says, and I think that Buffett likes to give advice that's also practical. And he was saying that you want to be able to take advantage of the American tailwind, and you don't want to ever be in a position where you're forced to sell something during, a short-term issue and then lose that on the potential gain throughout your lifetime. And he was literally saying that all Buffett would have had to do since college is just sit on his ass, save some money, and he would have made 100 to 1 on his money from literally doing nothing, as long as he was in a position to take advantage of that tailwind. This is why he encourages, I would imagine, why he encourages indexing, even though he doesn't do it himself, is that a lot of people don't have the psychological, either have the time to research and invest in individual securities, or have the psychological wherewithal when a certain individual company is going through trouble. But I think it's psychologically easier if you're putting away money every week or every month or every quarter or every year, that you could just buy a little into an index fund, and you're essentially betting on the future of America, which tends to be a pretty safe bet, and you can do extremely well. The average investor only captures about 20% of the performance of the vehicle they're invested in, and if you can just dollar cost average and put money away in a very non-emotional and timely manner, and you don't get into a lot of debt, you're never forced to sell something in bad times, you'll do extremely well. And even though you're capturing quote unquote the average, you will do significantly better than the average just because you have the right psychological habits. And now Buffett's saying, most good salespeople believe their own baloney. And there's a lot of just, what I will add is I've seen so much crap in the financial industry and people overcomplicating things. And again, the average person who doesn't have to deal with any of the psychology and just puts money away in some periodic, time, every week or every month or every year or every quarter, they don't have to think about it. And as long as they are in a position where they never have to sell anything and never go into too much debt or 2-to-1 margin or something like that, again, they will do extremely well and way better than the average, just because they have the right psychological habits in place. And it's very important, and I think it's smart that Buffett talks about that. Buffett's making it very clear that he does not know what stocks are going to do in the short term, but that he thinks, America will do very well over the next, 20, 30, 40 years. And the biggest takeaway that Buffett wants people to be with is that when they're buying stocks, they're really buying partnerships and stakes in businesses, and not to really worry if they go up and down. So if you have questions for Buffett, you can email Becky Quick Berkshire questions at CNBC.com. All right, we're now going into the first quarter earnings that Buffett's going into. So Buffett is, saying the operating earnings are considerably less, because the virus came along. I think that was implied already. A lot of the businesses have been either stymied or completely shut down. Pour myself some more yerba mate. Love this stuff. Amazing. Buffett's been talking nonstop for over an hour. Wild stamina. Buffett's talking about the importance of keeping Berkshire in such a strong position, and what I would add to it is that it's literally key and crucial to maintaining their competitive advantage, and a large part of their culture and attracting people who want to, have a home for their business. If they can't be assured that they're going to be stable in a really tough environment, it will erode their competitive advantage, and managers of companies will be less likely to sell to Berkshire Hathaway in the future, even when Buffett's gone. Buffett is making sure these principles, these fundamental principles, are continue to stay embedded into Berkshire Hathaway long after he's gone. Many people have staked their well-being on the promises of Berkshire to take care of them, as Buffett is making clear. Buffett's talking about how when him and Charlie both ran their partnerships, they never had a single institution invest with them, and it really, they've, They look at themselves as trustees, managing the money of individuals and families over time. They take that mindset as a trustee, and it's not the mindset that every CEO takes. Again, this feeds into their competitive advantage because taking that trustee mindset, you build a reputation over 50 years plus, and you've taken care of people and aren't gambling and playing with, speculating with people's money. People feel a lot more safe to do business with Berkshire. They feel more confident that Berkshire isn't going to screw them over in a bad deal and that it's beneficial for everyone. And then business owners who want to sell a Berkshire feel more confident selling a Berkshire and will take a lower multiple than selling to a fund where they don't believe necessarily the fund will have their best interest. It's a huge competitive advantage. Generally they say they need about $20 billion cash. It'll be interesting to see if that number currently is a little higher for the cushion they feel they need. I'm going to see if lowering the camera a little bit might be beneficial. Right. I like it better up. All right, I like this best. No, I'm gonna do how it originally was. That's the best. So Buffett's now recommending another book from the Bookworm, the book by Paul Volcker. One more little adjustment. Using this as part of my book stand. We're in business. Let's see here. Just looking for any interesting quotes or anything going on right now. Oh, he's just still talking about the quarterly earnings. Last change, I promise, guys. This is our first stream, so still figuring out best logistics, lighting, and how high I keep my laptop. All right, this is better. We're gonna stick to this. Now this is interesting. Buffett says that the 124 billion in cash explains just some of, why they don't want to be relying on the kindness of strangers or the kindness of friends. But he said some of it. So there's clearly a little bit more to it. We're getting to the stock purchases now. This is my big deal. Let's listen closely. So he's saying yes, the stock purchases have been really tiny when you get right down to it. $1.7 billion in stock that they purchased in the last quarter, and about $4 billion in equity, and they sold about $2 billion in equities. And they had operating earnings of almost $6 billion. I did very little in the first quarter. He's gonna add another figure, which he says he doesn't normally do. Oh, interesting. So from April 1st to April 30th, they did not purchase any stock. and they net sold about $6 billion in equity securities. Now he's saying it's not because he thought the market was going to go down. He's saying he thinks he made a mistake with something. Here we go. This might have been the view that I just talked about personally of why I sold Delta. It might actually be the same reason. Let's see here. So he's saying that they paid about $7-8 billion to own the 4 large airline companies, and there was getting about $1 billion in earnings from that. And he was saying that even though it's a cyclical business, that he would expect over time the earnings would go up. So FYI, I think those sales of the equity securities are probably all airlines, or most of it. He's saying that he thinks he was wrong about the airlines, and that while the CEOs are talented people, he thinks he's wrong based off these unforeseen circumstances. He's saying the airline business has changed in a major way. And that these 4 large companies are going to be, borrowing $10 to $12 billion each, and they're going to have to pay that back at some point. And they're going to have to sell stock or sell the right to buy these stocks at these prices, which is what I've said earlier, which is I didn't know, what that equity is going to look like, what they're going to have to do. And Buffett's saying he doesn't know that 2 or 3 years from now, people are going to fly as many passenger miles. Now, I think it's likely in 3 years that you'll have some return to normalcy for flying, but, you're not going to know what those balance sheets look like for some of these companies, and if they had to dilute a lot to keep them through this time, which is why I sold Delta. So there's a lot of unknowns, and it still could be a good deal, but your margin of safety, I think, dissipates, and your variance between intrinsic value of what these airlines could be worth have significantly increased to the downside if you're looking at probabilities. It always feels validating when your thinking is aligned with Buffett's, I have to say that. Let's take a look what's going on Twitter right now. Buffett's making clear that these sales do not involve a market prediction. Get into the Q&A? Oh, formal part of the meeting now. We're going to do the formal part of the meeting and then do the Q&A. All right. The formal part of the meeting is really not that relevant. It's just going to be, pretty mundane stuff. So we're going to take a quick commercial break, go get food and drinks, get some wine, whatever you want to do. This is going to be the most irrelevant. But we'll be back for the Q&A session. So, if you guys have any questions for me or anything you want to know, you can shoot me a message. Also, if you have a question if you're a shareholder of Berkshire and you have a question, you can send it over to Becky Quick at CNBC. At berkshirequestions@cnbc.com. This is Eric Schleien with the Intelligent Investing Podcast. We'll be back in a little bit. So with that, we will take a break. Have a good one. Guys, we are coming back. They are electing the board of directors right now. Will Warren Buffett get reelected? Do we have any bets? I think it's 99.999% chance he's going to. Here we go. The ballot. Here we go. Well, what's going on? I think Buffett is going to win. Looks like Ken Chenault, former CEO of American Express, is going to get onto the board. Looks like the management is going to get its way once again because, remember, Berkshire Hathaway is a dictatorship at the end of the day. Buffett, Munger, Abel, Ken Chenault, G. Jane, Tom Murphy. Everyone's gotten elected 100. It's almost like we just had an election in Venezuela or North Korea. It's like you already knew who was going to win. By the way, fun fact, actually, here's an unexpected twist to the election. Ken Chenault got the most votes out of any of the directors, including Buffett. Ken Chenault got more votes than Warren Buffett. What does that mean? How is that relevant? It isn't. It's just interesting. Compensation, ready? We're going to vote on compensation, guys. Compensation analysis. That's a joke at Berkshire. All right. They second the motion for compensation. Buffett just going to re-repeat the exact same thing again. God, I'm sure he hates this part. Like the part he needs to get through is Munger really hates this part. He's not showing his disdain right now because he's not here. All right. Oh, we've approved on an advisory basis the compensation of the officers. All right, compensation has passed, and Buffett will get his, his low six-figure salary. Can't remember if it's 100K or 500K now, but he's underpaid. So we're now going to be voting on how often the compensation gets set. The options are every 1, 2, or 3 years for that. Literally, Buffett's like, you guys don't even have to watch this part. Do your own thing in the meantime. You already know what the outcomes are going to be. It's total BS voting right now. Oh, what do you know? Frequency of every year to vote on Berkshire compensation. Who would have predicted? And then I'm sorry, did I say every year? Every 3 years. What I got voted on. What a shocker. All right, something with more importance now. See what they're doing. I'll enjoy my yerba mate. A motion that's important. I'd be curious to see what this is. Usually not important. No, the New York City Retirement System trustees put out a proposal. Let's see what this is going to be. Oh, it's a forced diversity on the board. We've had this before. Buffett's saying they were hoping someone from the controller's office could present the motion. They could have a good discussion on it, for the pros and cons. Buffett's saying it's a serious and important subject on the subject of diversity at corporate boards. And Buffett is saying that he thinks he's in sync with the controller of how he thinks the world should be around diversity, but that he disagrees on the way that this motion would be applied. Essentially, forced diversification. Buffett has making it clear he's been very, very outspoken that they focus on qualifications of directors versus just putting a woman or an African American up there just for the sake of doing it. And Buffett is also saying that he knows many people disagree with his position, and that he welcomes the idea of really having a fruitful dialogue on this and giving the controller the opportunity to talk about this and have a mature and adult dialogue and going back and forth. Have a conversation on it, just like a mature adult thing to do. So he was saying that they went to the controller's office, said anyone that wanted to come out to Omaha from the controller's office to present the proposition or proposal and engage in the discussion would be more than welcome to on the pros and cons. Buffett saying, as you might expect, they were not in a position to travel out to Omaha, send someone in to be at the meeting. So Buffett said that he'd be even happy to have someone introduce the motion on their behalf if they couldn't make it to Omaha. And also if they would send along some supporting statements, that they would be glad to present that to shareholders. And have that person who was there, proxy to read the supporting statement and present that supporting data. And just ask they keep it to 5 minutes. And the controller's office emailed back to Buffett immediately and said, they would be more than happy to do it that way and would keep it down to 3 minutes. So they've actually sent Buffett some supporting statement. So I'm not going to read the supporting statement on here, but you guys, if you want to listen in onto the Yahoo Finance stream, you can listen to the statement from the controller's office and their proposal, and we'll listen to it. And also, they're going to read the original arguments that they made in the proxy, and they're also going to, and Buffett's going to read the reasons why he believes we should, us shareholders should vote against the proposal. But Buffett thinks it's an incredibly important topic to have a public conversation about, and he's saying that he hopes next year someone from the controller's office can come out to Omaha and even have a more full discussion on the subject. And he's going to have Mark Hamburg at Berkshire read the statement in support of the motion. Really interesting. Mark Hamburg is a proxy for the New York City Pension Fund. Very interesting. Hey, Sean, thank you for the follow. Appreciate it. We're listening into, this shareholder proposal around diversity that Buffett really wants to make a public conversation because he believes the topic is so important. And even though he is on a different side of the issue with the controller's office in New York City, that he thinks the outcome, he's for the outcome, just not for the process. Well, and the controller's office is acknowledging that 21% of the board is made up of women, and that they brought Ken Chenault onto the board, who is African American, and also Ajit Jain, another board member, who is also not a white male either. And they're now saying that women on boards have historically been rare, and Berkshire has shown they've been able to overcome that and have a 21% of the board. The controller's office looking to nudge this process forward. Buffett's looking at his watch. I think he's ready for the Q&A session here. We'll say that it does not look good that you're looking at your watch during this proposal. I think we learned that from some presidential debate a while back.
Success that is of an external constructive, strong.
All right, they're going to act upon the motion. I'll get another tweet out here real quick. All right, formal part of the meeting has officially adjourned, and the shareholder proposal from the controller's office has failed. Buffett is reiterating again that if you have a question and you're a Berkshire shareholder, you can email Becky Quick, and we're ready for the questions. I think this is the time you all have been waiting for. Thank God. Can you believe we have been streaming for almost 4 hours now? And we're now just getting to the Q&A. So, all right, here we go. I miss those snacking on CMC's candies right now as I'm watching. That's what I should have done is ordered some Coke. Becky Quick live from her house. By the way, Becky, great book, Shoe Dog, in the background. It's the only book I can really clearly see. Good book, though. All right, question from William Lewis. He's asking if he sold the interest in the 4 different airlines. Buffett thinks he's not going to normally talk about it. He will in this case that he thinks does require an explanation. So interesting. Really, really unusual times here. So it's talking about selling the airlines. Listen to what he has to say here. He's really saying the world has changed and he doesn't know well enough to know how it corrects itself. I think what he's not saying here as well is that we don't know what it's going to look like if they have to sell more equity, or what kind of financial engineering the airlines are going to have to do to stay afloat here. And of course, that could, if you have to dilute equity holders by quite a bit, it could significantly change the intrinsic value. So obviously, they've been raising some money right now, but hard to know exactly what's going to happen. So as he's saying, you don't know how they come out of this. So yeah, of course, airlines have been impaired, but who knows what it's going to look like in the interim. Looking online to see if there's any interesting comments to add to this. Greg Abel just said his first words on Berkshire, and he just said, "I have nothing to add, Warren." Hold on. I didn't really intend to say it like that, but you covered it well. Let's put it on record. Greg Abel's very first words at an annual meeting: "I have nothing to add," in the spirit of Charlie Munger. That's so good. So good. All right. That's great. That's my favorite part of this entire thing so far is Greg Abel saying, "I have nothing to add." You could even see Greg Abel was like, "Oh, that wasn't intentional for me." Come on, dude. It was totally intentional. You've been waiting 15 years to say that. Oh, and Buffett has also clarified now that he has sold his entire stake. And Buffett's saying if he sells something, he often sells the entire stake, that he just trims his position. Rational Walk on Twitter goes, "Abel has nothing to add and Charlie approves. Berk 2020 hashtag." Love it. Love it. I think Buffett needs a haircut, by the way. Just saying. All right, let's see the next question coming up. Robert Tomas from Toronto, Canada. Good question. He's saying, well, why are you recommending people to buy now, but you're not buying at Berkshire? Buffett's saying there are things that are quite improbable that he doesn't think will happen. Doesn't mean it doesn't mean they won't happen. Now he's talking about the insurance unit. So this is again something we've alluded to before on this very first HotMic broadcast. I will say we've done a pretty good job so far alluding to some of the things that Buffett is now disclosing. So uncertainties in the insurance business, even though the probabilities are low for taking certain kinds of massive losses, it's not 0%. And if it's not 0%, as he said, he needs to keep that. He needs to keep protecting people, keep serving their customers, keep building that trust and that fortress-like balance sheet. And God forbid he puts himself in a position where there's now huge losses in the insurance subsidiaries in a few months from now, and they now are struggling because they put $100 billion into equities. In that kind of worst case scenario, well, now Buffett's, Berkshire has really harmed their reputation, and their reputation is what gives them that competitive advantage. Besides having a good capital allocation program, and Buffett's also making clear that he's not saying I'm recommending people buy stocks, but that he's saying you shouldn't buy stocks unless you expect to hold them for a very long time and you're prepared both financially and psychologically. So again, in Berkshire's situation, if they need more cash all of a sudden and now they've just spent it all, he doesn't want to be in a position where they ever need to raise money. So as I said 3 hours ago, now that was probably going to be his answer, and it turns out that's his thinking.
Somebody should do something. Stand it.
All right, next question from Scott Kelly. What did you spend the 420x million on equities for? Let's see if he discloses it. Buffett says he doesn't remember. Oh, that's funny. And he's saying those figures include both Todd and Ted, and they manage significant sums of money. So it could be something they bought, and it could be something he bought. So he's saying that's not much money at Berkshire anyway. Yeah, so he's saying his meaning it probably wasn't him. Probably Ted or Todd, or a combination of both of them. All right, next question. Leandar. Last financial crisis, Berkshire acted a lender of support for 8 different deals. And they were, paying for the sign of confidence from Berkshire, even though the deals were expensive for those companies. But today we have QE into infinity and low interest rates and hedge funds. Even though the economy has deteriorated, why have we not acted as a lender of support? And of course, and Buffett saying we haven't seen anything attractive. But also remember, Charlie Munger said the phone isn't ringing. That's a big deal too. And again, alluding to what I said earlier, because the Fed acted so early, perfectly decent companies got a chance to finance in huge ways, recently. And let's see what he's saying. And Buffett's even saying Berkshire raised some more money and some long-term capital, low interest rates, even though they don't need it. So I think that's what you're dealing with, right? So you have access to credit markets where you didn't. He's saying, you didn't have that kind of access, in 08. And of course, that's going to take away opportunities from Berkshire. What, we talked about 3 hours ago, but, Buffett's just confirming all this. But he's also saying, that could change very quickly, and maybe it won't change. But look, if it changed quickly, then I'm sure Berkshire will get more deals. Buffett's also making it clear he wasn't buying anything to make a statement to the world, even though it might have. But that, he made them because they thought were, intelligent investors, intelligent investments. Hi, Sean. Welcome. Buffett's also saying he would have been a lot better off if they waited 4 or 5 months, and that his timing was terrible in 2008 or 9. But that what was available was so attractive that even though his timing was terrible, that it came out a little bit better than okay. But he said he doesn't do things designed to make a statement, but to take advantage of attractive terms in the market. And they were terms that no one else was willing to offer at the time because the world was in a state of panic. Saying, that the market and equities were in a state of panic for a short period of time when the virus broke out and spread to the United States. And was saying that the debt market was in the process of freezing, but that changed dramatically when the Fed acted. So, again, what I think what really he's saying is this, he's been competing with the Federal Reserve for deals, and the Fed's going to always offer more attractive terms than, keeping debt markets open. That that's going to be better than any deal Berkshire's going to be making. Oh, Greg Abel's going to speak. Let's see what Greg says. Interesting. Greg's saying that there were calls coming in, but not at the size that Berkshire was interested in. Interesting. And Greg's saying that post March 23rd, those companies have been able to act. And then Greg was saying that they've issued $4 billion post the Fed action. And they wanted to extend some short-term obligations. So they're looking to get long-term funds at low interest rates. Makes a lot of sense. I mean, if companies are doing that and have access to the debt markets, they're not going to go to Berkshire Hathaway. Yeah, Buffett is saying it's a very good time to borrow money. But saying it's not very good for Berkshire. But that they have borrowed some money, so they're putting their money where their mouth is. Which is what I said earlier, that if you're on a little bit of margin at low interest rates, or you borrow money to buy a piece of real estate, it could be helpful. Well, Buffett's saying that he has sent money to some subsidiaries, but he wouldn't send money indefinitely. But if it makes an impact in their competitive advantage, competitive position, that he's going to do it, which makes sense, and that's a big advantage of running that holding company and being part of the holding company. But he's making it very clear he's not going to subsidize companies with shareholder money, that he's not interested in that, which of course makes sense because he's looking at good rate of return, not just to subsidize and prop up businesses. He is saying that companies that need money, that market share is not their number one problem. All right, now Greg Abel's talking about going into the pandemic and what they've done, making sure the employees are safe and that the business environment that we're in, that they can continue to operate. And now he's talking about how they very quickly moved to see where their customers were in the cycle. And he's giving a lot of credit to the managers of how they've been able to be very agile and have adjusted the businesses for the underlying needs and demands of the customers. So effectively, that the businesses are moving with the customer, meaning that very few of the operating subsidiaries under Berkshire Hathaway have actually even required funds. But as Buffett said, their competitive position is not going to be their number one concern if they actually do need some capital. It's not just to be propped up. And Buffett's making it clear that Berkshire is almost certain to be generating cash throughout the crisis. Buffett's also clarifying Greg Abel's comments that while they lengthened the financing with low interest rates, they never were reliant on short-term financing. That's not something they do at Berkshire. I think he's just subtly coaching Greg on how to message, because that comment could have been perceived that Berkshire was relying on short-term financing, which of course is not the case. I think Greg is very nervous. That's my take. Is Greg Abel's pretty nervous up there? I would be a little nervous too. First meeting up there, you have 1 million eyeballs watching you. You pick your nose, 1 million people can watch you pick your nose. You have an itch. You gotta wonder if Greg Abel's in his head a little bit. But, I don't blame him. It'd be terrifying, potentially. Just because you're a good operator doesn't mean you don't have stage fright. So we'll see. But Buffett's saying, well, we need a lot of money. We don't need 130 billion. So he is saying, if there are ideas for big deals to bag that proverbial elephant, he's willing to do it. He's making that clear. But he's saying that he does want to. They do want Berkshire to be in a position to get through anything, because that is, as I would add, their competitive advantage. Buffett's saying anything could happen. We want to be prepared for anything, but that he wants to do big things if the price is attractive. Now, again, this is what I was saying a few hours ago. They were getting calls before the debt markets seemed to be very open, because the debt markets were freezing before the Fed acted, and they eventually were able to get financing in the public market at terms that Buffett would not have given to them. So again, the Federal Reserve is competing with Berkshire, and the Fed's actions are going to win. Good for the country, not good for Berkshire. It's a real problem. It's a high class problem to have when you don't have places to put all your money. Imagine if we all had 130 billion just lying around. All right, let's continue with the Q&A. Let's see what Buffett's. Well, I'm going to bet the airlines are going to be down a lot tomorrow, too, after what Buffett said. There's been a few times in my life personally where I bought stocks before Berkshire. I think this is the first time I can remember. I'm pretty sure it is the first time where I actually sold some stock before Buffett sold Berkshire sold the exact same thing. Let's keep listening. You guys are just joining in. We're just talking about we're in the Q&A section right now of the Berkshire Hathaway meeting, and you could follow on Twitter at #YFBuffett or BRK2020. If you want to listen to the actual live stream and listen along with us, just go to the Yahoo Finance live stream for the Berkshire Hathaway meeting, and you can listen along and listen to commentary. Greg Abel's talking about how some of the businesses are shut down right now, such as like See's Candies, and some of the retailers, some of the jewelry companies, and that he's saying that even if some employees are out of business or not working right now, they're gonna reemploy all those employees once they open the doors again, such as with See's Candies. Some chocolate. It would be listening. I'm gonna open up my chocolate bar. Oh, good. Buffett now is talking about, it's possible the world's changed regarding office space. Something we've talked about before. I've talked about it on the podcast, the non-Livestream podcast, on the Intelligent Investing podcast. Question from Chris Reed of Philadelphia. Talking about the sale of Berkshire Hathaway Media. That some subsidiaries will not be opening when the coronavirus is lifted. Has Berkshire changed their policy of keeping their underperforming companies? So he's saying that if a company or operation that its prospects are going to continue to lose money in the future, they'll try to sell it to someone else. That one way or another, that they're not going to continue to operate those companies. It's not a new policy. Buffett saying you could say he did that in effect to the airline industry. Buffett's saying if they owned 100% of an airliner, that it'd be a tough decision whether you keep the airliner and sustain billions of dollars of losses. He also thinks it's likely there'll be too many planes around. He thinks there's going to be an oversupply of airlines. Buffett is saying that the airlines have done a very good job at raising money. I agree. I thought they would have to actually, the reason I sold Delta personally was, I thought they'd have to actually potentially raise a lot more equity. And so we'll see how that works out. But too hard for me. Really too hard for Buffett, too. Makes me feel a little bit better. Hi, Gavin. Welcome to the show. We are 4.5 hours into this live stream. It's an all-day affair. 7:30 at night, and we're still listening to Buffett. From Eric LaFond to Greg Abel. How is Precision Castparts dealing with this slowdown? Let's see what Greg says about that. So some of the business at Precision Castparts is hurting. I think in hindsight, we'll say that Buffett probably overpaid for precision cast parts. Boeing raised some money recently. It's amazing how much some of these struggling companies have been able to raise in this environment. But you know, when it's easy to borrow money right now, you get some very attractive terms. If I was Boeing, I'd be borrowing as much money. I'm actually curious to see what interest rate Boeing got. See if I can find that real quick. Which I'm very curious. I mean, because Bowen's really be hurting right now. See here. From CNN yesterday. Yeah, they're saying they don't need a federal bailout. Raise $25 billion. Here. I can't find details right now on the borrowing. But you know what? If you can borrow long-term capital at low rates right now, or lower rates for what you really should be getting, you take advantage of that. And you know, it's a different scenario than '08 when you really couldn't raise money. The question on Geico: will Geico experience unusually high profitability because of the reduced driving? Interesting question. So Geico is going to be giving back some money to policyholders. So they're running a program that involves people saving money. That involves savings for 6 months. Other companies have done 2 months. So they understand about serving the customer. Geico is the number 2 largest auto insurer. One day they'll be number 1. Due to them being a low-cost producer and having a superior competitive advantage. If there's any new Berkshire Hathaway news. Okay, here we go. Gamecock-YT says, corner Berkshire and Fairfax. Precision Castparts' answer was pretty gloomy, talking about nobody needing new airplanes and all the impacts to the employees. Yeah, I mean, that was kind of my take. I think it is likely they overpaid for Precision Castparts. I mean, they paid up quite a bit for it. We're going to take a very quick commercial break and we'll be right back. And welcome back to the show. You know, Buffett right now is talking about that they've written, they're not really dealing in the realm of business interruption insurance the way that other companies are, but they'll still have, litigation to deal with and claims and have to work all that out, and that gets costly. They'll be in a better position than any other companies. Which, if you look at their filings, you could reasonably have predicted that. All right, let's see. I enjoy looking at the Twitter feeds on this. Some very funny comments. Walter Tansman says, how come no question and no word about 20% unemployment? Here's a highlight from Yahoo Finance saying, when Buffett goes, we're going to have aircrafts in this country, but the question is whether we're going to need new planes or not. We shut off air travel in this country, and what that does to people's habits is just hard to evaluate. I'm more hopeful. I really do think that people get back to flying habits again, and things at least somewhat normalize. That's my view. Because, there are going to be Zoom and online meetings, but there still is that advantage of seeing things in person. I do think, and you also have to look at business travel trends over the decades, and even if it's been somewhat impaired, the growth still goes up over time in terms of travel demand. Here we have a question from a 10-year Berkshire shareholder. Well, so let's see. They're asking if Buffett, they could see Buffett offering or Berkshire offering pandemic coverage, and he says sure. They cover a lot of things. Story time. He said that someone came to the other day wanting insurance for involving a $10 billion protection on something very unusual. Let's see if he says what it is. He said he's not going to make the deal, that it's dead, but that he entertained it, but he's willing to look at it. He did say that, he would have said yes to certain pandemic insurance at the right price, and that he thinks that the right price would have actually had him be wrong given the context of the certain situation. I don't agree. It wouldn't have been wrong. It's just a set of probabilities. And, the pitfall, I think he's speaking more to the average person, but he would have made the right bet, but he wouldn't have liked the outcome. It's kind of like in poker. Just because you go all in and you lose the hand, it doesn't mean that you made the wrong decision. So it's more important to think in bets over thinking in probabilities over thinking in outcomes. Because if you only think in outcomes, you actually could end up hurting your process, and long term that hurts the outcomes. But yeah, they'd be willing to write pandemic insurance at the right price. Question for Greg Abel. Ooh, good question asked. If when Warren and Charlie aren't at the helm, if they can continue their approach of making deals when things are bad, and sometimes there's only a limited time to make really good deals and distressed opportunities. And Greg Abel saying that he doesn't really see things changing and that the culture stays intact even when Buffett and Munger are gone, which is something we've talked about, both on the podcast, on the Intelligent Investing podcast, but also here on HotMic. We've talked about this right at the beginning of the show. Speaking of which, we've now been on for 4 hours and 45 minutes. Granted, there have been some breaks and interruptions, but it has been a long day, and we are still on, and Greg and Warren and Greg are still at it, going strong, so we'll keep listening to Q&As and keep scrolling the internet and be on the lookout for any interesting comments or things worth noting to talk about. Buffett's talking now. Another question. Max Rudolph in Omaha, Nebraska. Has Berkshire participated in any of the bailouts from the Fed? Buffett saying he doesn't know of any. And Buffett saying there's no way he wouldn't know of that tract. And he's getting confirmation from Greg that there isn't. You're not participating in any of the programs or bailouts. Another question. Similar question. Seth Freedom. What's his view on the smaller holdings, the smaller business units like Oriental Trading or Nebraska Furniture Mart? And whether smaller companies like Oriental Trading applied for some of the PPP loans. How will Berkshire support them continue to employ their employees? Buffett saying again, have gone in for government money. He doesn't want to get into specific companies, but that he can assure that those two companies, particularly in his view, have a fine future. But he doesn't want to go down the list of the every single company, and he said that some of them he doesn't know the answer to, which is fair. Now he's going back to the newspapers. That he was saying that his the newspapers would have a much better chance of surviving if they're part of Lee, if they ran them independently, which is why they sold the companies to Lee. And he is confirming that Lee has been doing better, doing a better job with the newspapers than they were. Buffett's going into the list of some of the past companies like the textile business and the retail business, department stores and all that they transitioned out of over time. So it's not like they haven't been in dying businesses or tough businesses before where they've pivoted. Also mentioned trading stamps as well. Don't have an active trading stamp business anymore. And he said there'll, be more situations like that in the next 10 to 50 years, and there'll be new companies to get into, and other companies that, aren't successful. And he said that's one of the reasons that he suggests people, go buy an index fund. And he said, with the exception of Berkshire, he probably wouldn't want to put his money, all his money into any one company, but he said there might be a few companies where they're might get close to it. That could be an exception. But he was saying he thinks, there will be businesses that they invest in that they think will have good prospects that turn out not to be so good. and it's up to the world to judge their batting average over time. Fair enough, and let's see what Greg adds. Yeah, he's just reiterating he's not aware of any of the businesses taking any PPP loans, and that he's encouraging, if they were thinking about it, they would encourage a dialogue with those business managers first. But he's saying that most of their businesses are really in a good shape and ready, getting prepared to emerge from this pandemic. I think Greg Abel's shining a little bit more light and optimism there. I like Greg Abel's style. Kind of really straight to the point. Not as homey. There's none of the hominess. You know, I think he's just kind of doing his thing. Nothing bad with hominess either. Buffett's making it clear like he doesn't know how long the period lasts, and he said nobody knows. And most people think that the virus will decline in its spread over time, and especially during the summer months. But he's also saying that many think it will come back at a later date. And Buffett wonders, how Americans would react to a second wave. And he's saying that the unknowns that apply to the health aspect end up translating to unknowns in the economy. That he's just going to keep evaluating things as things go along, which I think is very rational. But Buffett's saying he hopes that once the virus is suppressed, that it doesn't come back and we readjust accordingly. But he said, things don't always work perfectly. And he said that, there could always have been better course of actions in hindsight. But that when you have huge unknowns, you have to be forgiving to that, which I agree with. You can always say we could have done things better in hindsight. Buffett's just saying, you better not be too sure of yourself of what, the virus will do in the next 6 months or a year. All right, let's see the next question. Question from Kevin. We're going to talk about passive investing and an investment time span of 10 years. Buffett's saying he hasn't changed his will. He's still directing his widow to have 90% of the funds and index funds. Got to remember, though, what he's also said in the past is that this prevents money managers from kind of being vultures and try to give her advice to kind of steer her out of things. It creates more psychological and better psychological incentives when someone who is not specialized in investing just holds index funds, and any kind of scummy wealth manager is not going to try to manipulate that person or other family members in generations down the line to do other stuff. Doesn't prevent it totally, but diminishes that chance. And of course, Charlie Munger has said that most of his family money is going to be into Berkshire, so they're doing things differently. He just brought up Jim Simons that he's outperforming the market through brain power, not luck. Which is interesting because he's not, a traditional value investor. He's doing quantitative stuff. So that might be the first time Buffett's ever acknowledged the quant guy before. And for those who know, we did an interview with the guy who wrote the big famous book on Jim Simons just recently. I'm going to put a link to that actually in the chat box. All right, let's go find a link to that. I'll give that to you guys. There you go. So yeah, here's my interview with Greg Zuckerman.
Next. This is from
all right. Talking about the performance of Berkshire underperforming the S&P over the last 10, 15 years. What would you attribute the Berkshire underperformance? I can't imagine selling the Berkshire stock. Some point money is money. Buffett saying he do Buffett's responses here. Now Buffett saying, well, I do recommend the S&P 500. Well, that's a cop-out answer. But he is saying that Berkshire is about as sound as any single investment, which I agree with. He is saying I wouldn't want to bet my life that we beat the S&P over the next 10 years. He says, I obviously think there's a reasonable chance of doing it, but he wouldn't bet his life on it. He's saying that 1954 was his best year, but he was working with peanuts. Here he goes again. He's working with smaller sums of money, that there's some chance that people are doing something that takes some skill, and that when you work with large funds, it gets tougher. Again, what we talked about earlier in the show. So he's making no promise they'll do better than the S&P. But he does say that he has 99% of his money in Berkshire. And even though he's said that even though he cares about the future, Berkshire doesn't guarantee results, but it guarantees attention. Greg's a little bit more straightforward. He goes, when I look at the assets in place and the teams that are in place, the commitment to Berkshire and the dedicated teams that are equally dedicated to Berkshire. And he's saying, well, I can't guarantee it, but he thinks he has a pretty great chance of Berkshire giving a good effort to outperform. It's interesting, Greg. I think Greg is more realistic, but Buffett is, again, trying to tame expectations like he does. Very interesting to see Greg Abel's style. I'd say Greg's style is probably more, I relate to Greg's style a lot, where I don't want to tame down expectations. I want to give, realistic expectations and give a variance that there is not a sure thing. And I think there's pros and cons to both, but everyone has a different way of expressing themselves and way of managing businesses and dealing with shareholders. And you can clearly see there's a difference in the way that they express themselves. Very interesting. All right, let's see if there's any new interesting news tidbits And I did a workout yesterday. My back is like, oh, it's ripped apart as I'm doing this. So let's see here. Okay, here's a good comment from Williams406 on Corner Berkshire and Fairfax. Paraphrasing Buffett, we know of one insurer that will have a lot of claims relative to their size related to business interruption coverage. Interesting. Well, be curious to see what maybe company he was referring to next year. All right, let's see if go to the Twitter feed. Let's see if anything interesting on Twitter. Great comment by Karen B. Foster. She says, as of 18 seconds ago, 99% of his worth is in Berkshire. I wonder how many other fund managers can say the same. Oh, boom, touche. So true. You guys, if you're looking for a money manager, always make sure they're eating their own cooking. Otherwise, avoid like the plague. It's a good quote. Caring does not guarantee results, but it does guarantee attention. So much truth to this comment by Buffett from Simone Brown. Let's see what the top comments are. Looking at the latest. All right, let's look at some of the other hashtags. Rational Walk makes a really good comment. Yeah, it's kind of what I said. Abel is clearly more willing to talk about Berkshire's positive prospects than Buffett is. You know, one other thing to note is that the intrinsic value of Berkshire Hathaway, if you just look at it as a measure of increase of book value and more importantly, increase in operating earnings, and you can use the two-prong approach that Buffett recommends. However you slice it, it's clear that there's been significant intrinsic value increases in Berkshire, but the valuation of the company has not expanded, even though book value has become less and less of a relevant measure. The price to book value has actually gone down when really, if the market is valuing Berkshire appropriately over time, the price to book ratio should actually go up. Now, this has not been the case for the S&P 500, where valuations have gone up a lot more than intrinsic value. And this is something that Buffett clearly isn't saying. Whether he's thinking it or not, I don't know, but he's clearly not saying it. And it might even be in bad taste to say it. I think that is an interesting point. Because it does get annoying. I mean, if you've been a Berkshire shareholder for 15 years, and you clearly see that Berkshire is becoming less and less of just an insurance company, which should be valued really much on book value, and having more other non-insurance operating businesses, the fact that the price to book value actually declines over time is a little ridiculous. It should go up, and you should be looking at, some kind of multiple of operating earnings, and then add that to the portfolio of companies, and you get a valuation, and then yet the price to book value is not altered. So yeah, valuation has not increased yet. Big increase in intrinsic value, and the S&P is certainly increased with valuation, with less increase in intrinsic value. So it's a very interesting observation to make, because literally if you've been an investor, say in Berkshire in 1990, right, and you notice now it's 30 years later, and clearly the business is so different, especially after the acquisition of Burlington Northern Santa Fe in 2009, 2010, something like that. The fact that you aren't getting that expansion in price to book multiples, while the S&P, there have been years now in recent times where the entire increase in the S&P was just from a valuation increase. It's just from multiple expansion, where Berkshire Hathaway has not shared in that same result, which is weird because Berkshire is a superior business to most companies in the S&P. It's a little wacky, and that clearly, if you were to say that if you measure the S&P 500 valuation, you said, okay, if we increase the market valuation of Berkshire plus intrinsic value compared to S&P 500 intrinsic value plus valuation, Berkshire certainly would have outperformed, but that has not been the case. An interesting observation, and something Buffett probably would never say. I don't think he ever wants to talk about a valuation of his own company like that. He'd rather just the results speak for themselves. It's just going to be frustrating for shareholders when the market isn't recognizing that superiority for years and years at a time. All right, let's listen back into the Q&A and see if anything more interesting happens. Now, 8 o'clock Eastern time. We've been doing this since 3 p.m. Many of us should be at dinner right now in the old market, and we're listening to Buffett and Greg Abel, the webcam. Really like Greg Abel's style. If you notice, I think he's just really straightforward. He really is more comfortable talking about some of the positive forward prospects of Berkshire than Berkshire is. You can see there's really a different expression in the way they talk about business. And I don't think either is better or worse, just different. It's certainly weird, when you're used to Munger and Buffett speaking every year and you have a completely different style. I think that's the weirdest thing. In any other company, Greg Abel would seem totally normal. Definitely less humor, though, with Charlie Munger not there. I think Buffett, you can see how Buffett plays into Munger's humor, where he isn't this year, and it's a little different. I think Buffett's a little bit more serious. Part of that might be Munger, part of that might be the coronavirus, but I think a lot of it is Munger not being there. He's talking about the energy business right now, that it's not a way to get real rich, but a way to stay real rich. It's really smart when you have, decent regulated returns. It's a pretty good way to spend capital, especially when you're dealing with billions and billions of capital. But yeah, the energy business has a long runway ahead. That's for sure. Jason from New Jersey, another question. Good question. Asking about the fact that Buffett helped Oxy with an acquisition that clearly was bad for Oxy shareholders, and that he thinks it's bad for Berkshire's reputation. Okay, Buffett's responding. Buffett's saying that he's already said before that how it's gonna work out is for a large oil company, when you're buying a large oil company, in this case, Oxy buying Anadarko, it's gonna depend on the price of oil and not some geological, surprise or a big mistake. Buffett's like, yeah, when oil goes down to negative $37 a barrel, yeah, it's not gonna work out too well.
It's a trap.
Buffett's saying the deal looked attractive at the current oil price, and obviously it doesn't work at $20 a barrel or minus 37. And he's saying that everything that the oil companies have been doing don't work at these oil prices. Just for a second. And my body gets a little stiff when we're doing it for this long. Past 8 o'clock now. Crazy. We've been doing this for over 5 hours. Buffett's talking about all the wackiness in oil right now. Now there's too much oil in storage, and it's not going to work its way off very fast. He's saying production is going to naturally go down as it doesn't pay to drill right now. I mean, kind of makes sense.
Any shareholder in it so far. This is.
But yeah, I mean, he's saying if you bought oil stocks back then, you made a mistake. Depending on the current oil prices, and you don't know what you're gonna get unless you know the future. The niche. Is there a risk of permanent loss of capital in the oil equity investments? Buffett's saying there certainly is if oil stays at these prices for a sustained period. And he said there's gonna be a lot of money lost, and that it will actually even impact the banking industry as well. If that happens. It won't destroy the banks, but will certainly impact it. And especially there are some banks where the banks really aren't going to lend a lot of money to these oil companies, and if the price stays this low, some of these loans are going to go bad, and it'll cause some pain for some of these banks doing high levels of commodity lending. But Buffett's making the point that this would apply for the copper industry too, or any other industry where you had this kind of supply and demand imbalance at the moment. But he's saying if you're an oil producer, you're gonna take your chances unless you're selling your futures forward. And it's very rational. I mean, this is again why a lot of value investors don't get involved in commodities in the first place. There's too many unknowns in what the price of the commodity does, and you might think you're buying an oil company at a good multiple, and then the price of oil goes to negative 37, and you're kind of screwed regardless of what your analysis is. So it's a hard game. You got to remember, Buffett was not buying Oxy stock. He was he made a deal with preferreds to get a pretty high interest rate on a relatively well capitalized company. So it made sense for Berkshire, and obviously if you're Oxy and you're buying Anadarko, you're taking a certain amount of risk that there's some view on oil prices, and if Oxy got that wrong, it's not on Buffett that shareholders are, equity holders in Oxy are hurting right now. There's a reason he put money into the preferreds and not the equity. So I disagree with the premise of that question that it hurts Berkshire's reputation. I don't think it impacts Berkshire's reputation whatsoever. It's not a malicious thing he did. And maybe in hindsight it was dumb of Oxy management. Let's see if there's anything interesting going on Twitter right now. All right, going on to the. I love it. Tyler Moody goes, someone please ask Buffett about oil tanker stocks. Oh, that'd be awesome. Emil Bonadus goes, Warren Buffett answering a question about his investment in Occidental. He just looks so weird. Yeah, I don't agree with that. The guy's been up there for like 4 hours now. Watching the goat has the same COVID-19 haircut as I do from Sig. Love it. I mean, yeah, clearly the dude needs a haircut like we all do right now. And look at this little fluffer nutter I have on the top of my head. Call it my poodle haircut. Speaking of poodles, I've been dying to have a dog right now during all this quarantine. Like, going like stir crazy for a dog. Guess it's like the I have doggy fever. I'll leave it at that. Do I want to get a dog? Is that the rational thing to do? I don't know. Enough to do to the dishes. I don't know if I want to take care of another living, breathing animal. That might rip up my furniture. Anyway, you guys are listening to the 2020 Berkshire Hathaway commentary. This is Eric Schleien with the Intelligent Investing Podcast doing a special Berkshire Hathaway coverage on the Yahoo Finance stream through HotMic. Big shout out to HotMic for making this happen today. It's been really fun so far. I cannot believe we've been on the air now for 5.5 hours and we're still going strong. 8:20 Eastern time, and Buffett and Greg are still going at it. Should be eating a nice juicy ribeye steak at Upstream right now in the old market, or at my favorite seafood restaurant, Plank. But nope, I'm in Philly, listening with all you guys. And apparently Charlie Munger now uses Zoom, and that's been kind of hilarious. I will say there's the humor aspect really is missing from Charlie. Charlie should have zoomed in on this. That would have been awesome, having Charlie, Greg, and Greg and Warren up there. And we'll keep listening to the questions. Look at Becky Quick's Twitter, see if she's posting anything interesting recently. Nope, she has not tweeted in an hour. I guess she's reading the questions. She's getting a lot of questions. You have 1 million listeners right now. Expected 1 million listeners anyway. Ooh. Another question. Oh, Buffett's interrupting again. Never mind, not a new question. Man, I'm gonna go for a steak after this is over. I'll tell you that much. You gotta celebrate with a steak after this if you're quarantined right now and you're used to going to Omaha. Bob's like, I'm done talking. You can ask me another question. Okay. Super awkward. It's like when there's no one in the audience. Drew Estes has a question from Atlanta, Georgia. Speculation about post Buffett breakup. for Berkshire. The guy wants Buffett to make the case to keep Berkshire together, that it's strong, it's more valuable together than breaking apart, and says, don't leave that to the next person who will have less credibility than you. Buffett's made the argument before. He clearly hasn't been following. Maybe he just thinks he needs to reiterate that. I don't necessarily disagree with. We are reporting play-by-play for the 2020 Berkshire Hathaway meeting. You can find the Twitter handle #YFBuffett if you want to participate in the Yahoo Finance Twitter conversation. You can also tweet at me, either Eric Schleien or at InvestingCast. And just going to keep listening in and call the shots as I see it. Got here.
So
Oh my god, Dark Fire Capital goes, hats off to Uncle Warren for admitting to being the force behind the airline stocks buy sell. Would have liked a better or any explanation for the rationale. I still think he's masking a drinking problem. Oh man, that's... Oh, alright, I'm not even going to respond to that one. Andrew Kuhn goes, that's 2 pot references by Warren so far. Okay, let's see. Go back to my Twitter. I'm loving some of these comments. So good. Options Universe goes, Warren Buffett once called derivatives, quote, financial weapons of mass destruction. A bit hypocritical after telling his shareholders about billions of dollars he received by selling puts in SPX. Options Universe, that is incorrect. He's been cleared that, him and Charlie have talked about this, that Berkshire Hathaway does have a derivatives book. But there's a difference between using derivatives that they think are mispriced and taking advantage of that versus, back in the early mid-2000s, where they're essentially banks speculating and, larger funds speculating with derivatives that were destined to, be really, really dangerous. So just like anything, you can use the stock market to gamble and speculate and buy, junior mining companies not making any profit with some prospect of digging up a bunch of gold in the ground. You can also use derivatives to, potentially speculate and, when shit hits the fan, you're screwed. So the way that Berkshire uses derivatives is to find mispriced derivatives. Very, very different. It's still value investing. So Options Universe, you're wrong. Denied. Let's see what else we got going on. All right, Greg Abel just made a comment just to kind of second Buffett's comments that keeping Berkshire together adds value. Rob Grandish in Washington, D.C. says interest rates are negative in much of Europe and Japan. Warren's written many times that Berkshire's insurance company is derived from the fact that policyholders pay up front, creating insurance float, in which Berkshire gets to own interest. If interest rates are negative, and collecting money up front is costly rather than profitable. If interest rates are negative, then the insurance float is not now a benefit but a liability. Can you please discuss how the Berkshire's insurance companies would respond if interest rates became negative in the United States. And Buffett's saying if interest rates are negative for a long time, you better own equities than debt, which is true. Buffett's saying he's been wrong in thinking that you could have the developments that you've had in interest rates without inflation taking place. Charlie's been saying the same thing. I think I've brought that up on the podcast before. Talking about how treasury bills are a terrible investment over time. Buffett is also talking about he wants to make sure that he can pay the liabilities over time in the insurance policies. So if the world turns into a world where you can issue more money and have negative interest rates over time, Buffett's saying you have to see it to believe it, but he's seen a little bit of it so far, and he's been wrong so far. But he doesn't think, or at least he doesn't see how this is what he's saying. If you can have negative interest rates and incur more and more in debt into productive capacity, you think the world would have discovered that in the first 1,000 years? But he's like, we'll see. It's a weird thing. Buffett's saying it's one of the most interesting questions he's ever seen in economics. I mean, I just think it's totally weird. It doesn't make sense long term. But look, he's saying the world's been able to do it now for 12 years, so I don't know. He's saying the world might reach a period where we're testing that hypothesis, but he's like, I wish I knew the answer. He's asking Greg Abel if he has any thoughts on it. See what Greg has to say. Yeah, he's saying the same thing. We don't know the answer. And that some of the fundamentals are pretty interesting. Of just, negative interest rates, how weird it is. He's like, I hate to say it, but I have nothing to add. Oh man, he's like, he's almost it's almost like he's shameful that he's using Charlie Munger's words. I have nothing to add. You can see he's like literally insecure about saying I have nothing to add to that. Oh man, that must be a lot, stepping in a Charlie's shoes like that. I don't know, I probably feel the same. And we've been on now for 5.5 hours. It's now 8:30 Eastern time, and they're still going strong with questions. Adam Schwartz in Miami, Florida. Talking about the capital intensive. Ooh, interesting. What are the inflationary or deflationary risks in the capital intensive businesses that Berkshire has invested in? He's saying he thinks increased corporate taxes over time will be a higher probability. Okay, but this is not about the inflation risk. Buffett, what are you talking about? Yeah, we know you have a larger percentage of the corporate, the government's profits now to Berkshire, but what does that have to do with your question? Why is he talking about corporate income tax? This wasn't the question. Buffett, what are you talking about? It's not answering the question. No, okay, it kind of is. Thanks. He's never required capital, didn't grow, didn't take money to expand it. Let's see. Not really directly answering this question. Saying capital-intensive businesses just aren't going to be as good in their nature with asset-light business. Yeah, we know that. You're not answering the question. The one thing I don't like about Buffett, I hate criticizing, but it's like sometimes just go on a long spiel and not directly answer the question. Answer the question. Yes, we know a business that doesn't. Yes, we know it's a lot of money if a company doesn't take enough capital. You're repeating yourself, Buffett. Okay, get to the point, Warren. Yeah. We know that. We know that as well. Oh my god, he's now said if the business doesn't take capital for the 15th time, yes, you've made your point, Warren. Answer the question. Is it like every other sentence you're going to say the same thing? If it doesn't require capital, it's a better business. Yes, you've now said that 19 times. What is he talking about? He's not responding to that question. Let's see if Greg responds. Okay. He's going to answer the question, Greg Abel. Thank you. He wasn't in capital intensive business, and he's saying there is an opportunity. Because when we're looking at energy and rail, they have some pricing power. So he's saying if they move into an inflationary period, it's not perfect protection, but that they generally can recover a significant portion of their costs, even in an inflationary environment, and get a reasonable return. And get a reasonable return on their capital, even in their inflationary environment. He said there might be a little bit of lag. Okay, Buffett's saying if there's 10 for 1... Interesting. So thank you. So Buffett said if there's 10 for 1 inflation, he'd be very happy to own a railroad. That makes a lot of sense. And he's saying that business is a very solid business for decades to come. He's also saying it'll earn more dollars if there's a lot of inflation, but nominally, obviously, not in real terms. But he's saying generally a lot of the energy projects would. But Buffett's saying it's better if we don't have inflation and we can find the same sort of businesses that are not as capital intensive. Yeah, it's true. Okay, you finally answered the question. I think that's what the guy was looking for. I don't know why you went on a 15-minute spiel about something that had nothing to do with the question, but it's your show, it's your deal. So, whatever. Charlie Wayne from San Francisco asked the question now. Asking if there's risk of the U.S. defaulting on their bonds in these times. Buffett saying no risk to that. But of course, what he's he's saying it because if you print bonds in your own currency, that what happens to the currency be a question, aka inflation, but you're not going to default, right? Because you have the printing press, so you're not going to actually have a technical default. We are going to take a really quick break. You are listening to the Intelligent Investing Podcast through HotMic live stream 2020 Berkshire Hathaway annual meeting. And we will be right back in a minute. Have a good one. And we are back. Doug Cass, finance professor at Maryland, is asking a question. Why does he always get the question? He always is able to get an answer a question. I think he's in a conspiracy with Becky Quick. He always seems like he is able to answer a question. I'm gonna change the lighting. It's like way too bright now as it's gotten dark out. Is that better? I think it's better. Yeah, we don't really need the bright lights anymore. All right, so anyway, the question was about buybacks and just Buffett's talking about the dynamics of a buyback. Very simple stuff. Nothing really that interesting. But he's just talking about that buybacks. You're just giving money back to shareholders, no different than a dividend. You're still taking money out of the business. Let's see if there's any interesting new comments on the internet. All right, let's see here.
Sing my sure. Still stock. Sister. Some money she doesn't. Sell some of their television. It's fine. Second, this is a point. Should be
Now Buffett's saying he thinks companies should buy back stock below what they think it's worth, and then sometimes that CEOs will make mistakes with that. Duh. And he is now talking about Jamie Dimon shares the philosophy that they'll only buy back when it's advantageous to the shareholder. He's saying, it doesn't make sense to go buy a business for $5 billion when you know what you're going to get for the money, and that buyback should be the same thing. You're still buying back your own business, so it should be at a fair price. The conditions should be right, and it should be obvious to repurchase shares. That there shouldn't be the slightest taint to it any more than there's dividends, he's saying. So Buffett's saying that if you're gonna attack companies to do buyback, then you should also attack companies for giving out dividends because they'll have more money than they would right now too. It's totally ridiculous. Either the politicians are, don't understand, or if they're actually that stupid, they don't understand the distinction, or they just use it as a talking point. I would imagine most of them just use it as a talking point because a lot of people who hear that are kind of dumb and they don't understand, and then buyback sound evil and greedy and horrible for the American people or whatever country you're talking about. The fact that this has to be explained is a little ridiculous, but I guess some people don't get it. It's really pathetic, the financial literacy in this country. Now Buffett's talking about, buying back stock because it's fashionable is ridiculous. As long as it, increases the value of the remaining shares, it's a good deal. You've made the point, Buffett. But he's saying just to do it is stupid. He's saying it's not immoral, it's just stupid to buy back stock that's overpriced. Exactly. People like Bernie Sanders don't understand that, or AOC. But I don't know if they don't actually understand it. I don't think they're that stupid, but maybe they are. Buffett said he's not going to do what's politically correct. He's going to do what is best for shareholders. Yeah. All right, another question coming in. What a stupid question. He's asking to split the A shares. Guy doesn't understand. You can just convert the A shares to B shares. Oh my. Why, Becky? Why are you even entertaining this question? Thank you. Buffett's just saying you can convert A to B shares. God, this is like a waste of bandwidth to be answering these kind of dumb questions. It's a waste of time to ask questions like this, Becky. I don't know why I don't know why she's entertaining these questions. It's like you don't know how much time Buffett has left, and you're gonna ask a technical question on the A shares and the B shares. Like,
Certainly.
the guy's asking, well, if I have an A share and I have a $200,000 capital gain, but I only need $60,000, what do I do? It's like, dude, convert it to the B shares and just sell a little bit of it. I don't know. I don't know why. I don't know why you're entertaining this question. A waste of time. Ask a real question. I mean, let's learn something. This is the stuff I don't like. I'm being real honest. Another question. Okay. It's almost 9 o'clock Eastern time and this stuff is still going on. It's unbelievable. We've been live streaming now for almost 6 hours. Like, amazing. Just incredible. Alright, let's see if there's any more interesting comments on the internet. Let's see what else. There's some articles coming out, but it's everything we've already covered. Yeah, most of the news coming out is on like the airline stuff, which we've already covered extensively on here.
Shut down. Event. Sure. This was something. The need reg. See, but standing by. Shape. So that's how he is built.
Ralph Whitkin says Buffett has spoke very strongly in favor of companies buying back their own stock. Yes, as long as it's a good deal for shareholders. Again, if it's overvalued stock, he's saying it's not a good thing, and that it's not immoral, it's just stupid. So another comment before we had asked, So when Darkfire Capital talked about the drinking problem, he goes, hats off to Uncle Warren for admitting to being the force behind the airline stocks buy and sell. Would have liked a better or any explanation for the rationale. I still think he's masking a drinking problem. He then goes to clarify, drinking problem is a euphemism I use when normally rational people do really stupid things like buying airline stocks. I will say one of the things I love about this this meeting, you don't have the crazy long, redundant intro. I mean, some of these people, they introduce themselves. Hi, I'm blah 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 from blah 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 blah, and I blah blah blah, and it's like 5-minute introduction. It's like, get to the effing question already. So you don't have any of those long-winded introductions, and you get much better questions or much more questions this way. So that's really great. I like that. You guys believe it's almost 8 o'clock? This thing is still going on. Not only should I be eating dinner at this point, I should be starting to get somewhat tipsy. I don't drink a lot of beer, but this is where we'd be drinking right now with friends.
This question I was looking for.
All right.
He says,
Why did you not repurchase shares when they were 30% less than what you were doing before? Here we go. This is the big one too. Okay, saying it was a very short period when they were 30% less, but okay. Cop out answer. Let's keep going. Okay, so what we alluded to, again, we've already said something through HotMic that now Buffett's saying hours later. He's saying that even though there's been the decline in the stock price, the intrinsic value has probably dropped too, where the price to intrinsic value isn't really that much different. So literally what we said before. I have to say the advantage of literally having watched Buffett now for 15 years or more, actually, it's like I can literally predict some of the shit he says before he says it. A little scary. Greg's talking about it. Let's see. He's gonna ask Greg about it now. About thinking about repurchasing shares. And he's saying that he thinks, I can't add anything other than that he thinks the approach is the right approach. And it's the right thing for the shareholders. He's saying the intrinsic value of certain things have decreased. He said Berkshire is worth less today because he bought back a little stock a few months ago. And he doesn't think it's more compelling to buy the shares now. He doesn't think it's less compelling either. Yeah, I generally agree with that. What he's really saying is the price hasn't gotten so screaming cheap, it's just a no-brainer. that it feels just about the same. And then there's also the option value of cash as well. It's really telling. His uncertainty of his uncertainty there is really the uncertainty of the future over the next, at least over the next few months with the coronavirus and how that impacts things permanently. It's amazing that it literally took 4 hours though for the literally first question to come up about why Buffett isn't buying back more stock. And just saying that he doesn't really feel it's more compelling than it was 3 or 6 or a year ago, and that could change. I like this. Ed Bergato on Twitter says buybacks really are the simplest of financial concepts. Buffett offered a very clear explanation, and certain people won't care to listen to learn because it becomes a useful political cudgel. They want to not know. They need to not know. Their agenda requires remaining ignorant. I love that. I'm gonna repost that on my Facebook. That's so good.
Said, what should I do?
I mean, it really is such a stupidly simple financial concept to it. Like, yeah, I mean, it really blows my mind how stupid people are. I don't know if they're just, if they're dumb or if they need people to remain ignorant. It's really interesting. Just interesting to think about. All right, let's listen to the questions. Greg's talking about their kids carefully using their credit cards. Buffett, this is interesting. From an hour ago, Buffett admits he doesn't remember what Berkshire bought in April, so therefore he's admitting to significant cognitive decline. He said he, quote, probably didn't make the purchase in April. That's really, really bad. I predict he retires or de facto retires within a year. Jonathan from Twitter goes, he just doesn't seem right, short of breath or something, and his tone is not the normal, cheery, whimsical Buffett.
Taking care. Surround.
Jake on Twitter goes, the easiest explanation remains that they don't actually have $130 billion to buy stuff. And Buffett kind of alluded that, but I think that's over exaggeration, because he did say they can buy something that's big if they need to.
Myself and it just isn't that easy to certain amount. And they
Keep listening in. Bill Murray, the actor, also a shareholder. Who knew? Bill Murray asking a question at the Berkshire Hathaway meeting. I love it. How do we take care of the veterans during all this and the aftermath of it? I know I'm stretching a lot. We've been doing this for 6 hours pretty much straight now, so pardon me if I have to move my neck a little bit at times. Still can't believe Bill Murray asked a question. And it was a serious question, too. It wasn't like some practical joke thing.
should be doesn't happen to have skill, so I company.
He goes, you know, if we go overboard on anything, do it on helping those that need it the most. Well said, Warren. Well said.
Some, but
I mean, it was interesting. He said, you know, on the PPP, there will be some fraud, but I'm 100% for taking care of people. I'm totally for the basic idea. I give real credit to both Congress to acting promptly, and I give credit to trying to do the right thing. Yeah, it was a great question by Bill Murray. So, I mean, when he says veterans, really, it's how can we repay the frontline and healthcare workers after this is over? So the veterans of this, and you know, pandemic. I didn't mean to say Army veterans. That came out that way. And you know, Buffett really was like, you know, look, we can never fully repay. And like the people who landed in Normandy, he used that, you know, example. If we go overboard on something, it should be with them. And I 110% agree. That is like, if you want to talk about the line right there, please, yeah. We are going to spend any money, spend it on them. You guys are heroes, by the way. Hi, Keith. We have Keith joining us. Welcome to the broadcast. And if you're just tuning in, we're just listening to the Q&A portion of Yahoo Finance's stream on the 2020 Berkshire Hathaway meeting. All right, well, let's keep listening in. Greg Abel talking now. Got another question coming. Ooh, last question. People questioning the validity of capitalism. Buffett saying the market system works wonders and brutal if left entirely to itself. And he's saying that we wouldn't be the country we are if the market system wasn't allowed to function. And he's saying it's creative destruction. And he's saying that for the ones that are destroyed, it can be a very brutal game, which of course it can be. He doesn't want to come up with anything different. At capitalism. It's amazing when people think there's some injustice, they want to throw out the entire system. It's really short-sighted and dumb. Great quote. I do not want to come up with anything different from capitalism. I love it. Steve Howard Trosh goes, question comes in from Bill Murray, the actor. Oh, wait, what? Yeah, that's like the highlight that Bill Murray is a Berkshire shareholder. I love it.
6.
Stretch in there. Yeah, guys, if you're sitting down for 6 hours watching this thing, stretch a little bit. It'd be good for your body. I think Buffett should auction off that Coke can on the side of him for charity. Sure, someone would pay a few $1,000s for the Coke can. Coke can used by Buffett for the 2020 meeting. The Coke can. I think he's only gone through one Coke. And he hasn't been eating any peanut brittle. Little disappointing there. Guys aren't eating peanut brittle. Ridiculous. Greg Abel's not talking about capitalism. Alright, he's not saying anything. Not making any real revelations here. Greg just basically saying it's the best model out there. Ooh, one more question. Get a bonus. Buffett's talking about how smartness is not equating to wisdom. Absolutely. Buffett's saying every day, Benjamin Graham tried to do something both, creative and also foolish. And that IQ does not always translate to rationality and behavioral success and wisdom. Just totally true. Greg has no other thoughts on that intelligence and wisdom. Buffett's leaving this off, talking about we're going to get some, potentially unpleasant surprises. And then it spreads its wings in unpredictable ways. And how Americans are going to react to it, there's all kinds of possibilities. AKA, he has no idea. But he's saying never bet against America. That's what he's leaving it off of. I think that's pretty much it. And Buffett's saying, we'll see you next year, and we'll fill this place. So I can tell you, I'll be going to Omaha next year, and I hope to see some of you guys in Omaha, Nebraska next year, and we'll drink and eat some good steak at Upstream. Anyway, that was the Berkshire Hathaway meeting 2020 conclusion, with Buffett and Greg Abel answering questions. And that is our stream. So a very successful first stream. And it has been a pleasure chatting with you guys. And thank you for everyone who participated. We had 16 visitors and 8 likes, which is certainly more than I think my first podcast, where maybe I had 5 people listen to it in the first month. So thank you so much for everyone tuning in. Thank you, HotMic, for hosting this very special event. This was 6 hours and 20 minutes of this. So I wish you all a wonderful night. It's 9:16 Eastern time. Unbelievable. Anyway, I hope you guys have a wonderful rest of your night, and I will see you back and hopefully be doing more of these live streams through HotMic. And we will, sorry about that. We will finish that a little too early. It's almost like I'm ready to go. I think we might all be ready to go. So with that, I'm Eric Schleien. You're listening to the Intelligent Investing Podcast, HotMic live stream. If you want to listen to non-live stream episodes, you can go to my website, ericschleien.com/podcast, and see all the episodes of the show. And with that, this concludes our broadcast of the commentary for the Berkshire Hathaway Annual Shareholders Meeting 2020, and I hope to see some of you guys again soon. With that, have a wonderful night. Bye.